Yeah.
All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. First live stream on the channel, so hopefully this goes okay. Thank you all for joining today, and we got some interesting price action on Bitcoin. So let's go ahead and take a look at what's happening. All right, guys. So last time we looked at Bitcoin, we did dump on Friday, and we were in this general area here, hitting a support that we were looking at, seeing that if we could reclaim the point of control, then we could possibly see a push up. But we were also talking about anytime you reject from a bigger value area, a volume profile, reject from the value area high, you first come down to the point of control. And if you lose the point of control, then you have a very high probability of making your way down to the value area low of the range. You can see on Friday, we did try to see that bounce. We did try to reclaim the point of control. We failed, and then we continued to dump down, making new lows yesterday and even making new lows today. So overall, Bitcoin is looking a bit weak here. I do think we could see another low down into this box of support that we're looking at. Let me zoom in here on the charts. Let's go to the 15-minute chart here. And on Friday, during my live stream in the Casper Crew Discord on Friday, I was talking about how we can be patient in this little area here. We want to start to see a range form, and we want to see strength come in on the charts before we attempt to enter along. Now, we did see some strength coming on the charts. I actually did attempt a long on Friday, got stopped out on that, and that's okay. You know, that's why you have proper risk management. But we were looking here, we dumped below our point of control of our range. And when we dumped below the point of control of the range, I was waiting to see if we could see first a break in market structure locally to give us a signal that we were making higher highs and higher lows. So let's go in on the 6-minute chart here. You can see in this area, we had our low, we had an initial high here, our first higher low here. So that was a sign that, okay, maybe market structure is going to change and maybe we're going to come in our favor to reclaim the position and see a bigger move to the upside. We did get that break of this high, just barely. It was a swing failure pattern, but we got the break of the high, made another higher low, and as soon as we started breaking this high again, I longed. And I understand the point of control was right above it, but I longed that with my stop below the low, looking for a reclaim of the point of control, which you can see we did reclaim that point of control, had a bounce from the point of control, and attempted to move to the upside, but we did not get very high. And if any of you were around on Friday, I was talking about watching this range here develop over the weekend from this little high, this guy right here, and seeing if we can just range. Oftentimes what market makers like to do, especially on weekend ranges, is they like to stop out liquidity on both sides of that micro range before continuing the move. Well, our move into that range was a dump. So we started ranging. They came up, they stopped out liquidity up here, and then they brought it right back down. There was a possibility that we could have kept ranging, could have taken this low down here, and then made another move up, but obviously that didn't happen. We got our impulse to the downside here, and we continued down to make new lows. Another thing I want to talk about is that 886 touch very, very locally did give us a higher probability to come take out these lows. If we remember from Friday, if we just pull our fib from the low to the high, this very, very local area, and we turn on our 886 up here, and we go ahead and look at that 886. That 886 was tapped. So what that means, if we're in a trending move and you come back down and tap the 886, it gives you a much higher probability to come down and take out the initial lows where that fib was pulled from the low of the fib. We have ended up doing that now. That fib is no longer, or it played out. That played out there. And you can see once we lost the point of control, back tested that point of control as resistance, confirmed resistance, and then that's when we saw the real move to the downside. Let's go in onto the 15-minute chart here. And we have really just been ranging at this new bottom area here for the day, but I do expect us to continue lower. You can see we still haven't hit the value area low of the range yet, and right below the value area low is this key box of support that I was talking about for about a week now, but really emphasized it on Friday that we could dump down all the way to grab the liquidity that was front ran about a week ago, this area right here. We did not hit our weekly level. So I'm going to go ahead and turn on our weekly levels. And you can see that we have a fresh weekly at 80.7. And that weekly was front run in this area. I really wanted to see us come down and hit that weekly to see a bigger push to the upside. Now, we did get a big push to the upside, but that was a key support level. So why is this still a key support level? It's many confluences of support right now. We have our golden pocket. If we do our golden pocket pull from the lows here to the highs, let's see. Here, lows to the highs here. Turn on our golden pocket. You can see that golden pocket is right around the value area low and right around the weekly here. We have a naked daily point of control. Now, this naked daily point of control is on the Coinbase chart, but it is not on the Bybit chart. Let's go ahead and turn on our naked daily points of control. You can see right at the bottom of my box here, we have a fresh naked daily point of control at the bottom of this area here. If we go onto our Bybit chart, let this load up real quick here. No naked daily point of control on Bybit. But I like to follow Coinbase levels more. Coinbase is the exchange that I use most for my volume levels especially. So I am looking at that point of control, that naked daily point of control on Coinbase. Okay, let me go ahead and check the chat, see how you all are doing. All right, guys, I do not see the chat here. All right, there we go. Welcome, everybody. Welcome, Kajus. I'm sorry if I butchered that name. Welcome, man. Thank you for joining. DJ, thank you. How are you doing, DJ? Welcome, welcome, welcome. Circus Crypto, thank you, man. I appreciate you. Wanderer, welcome. Everybody, welcome. Thank you. Cookies, DJ. Awesome. Awesome. Thank you. Okay, so guys, let's go ahead and talk about this Bybit chart, because this Bybit chart here is actually pretty important. We've been following this pitchfork, this bearish pitchfork. Let me go ahead and hide some of the things on this chart so we can clear this up a bit. All right, so this bearish pitchfork was pulled from the all-time highs once we started changing market structure bearishly. And you can see how well respected this trend has been, this pitchfork to the downside has been. And I just want to talk about what happened on Friday. So now let's go ahead and zoom into our very local price action here. We'll go on to that 15-minute chart. And on Friday, we had lost this band of support. You can see here this band of support was acting as a resistance. We flipped it to a support. The upper part of the band was support, support, support. Once we lost the band here, one of the reasons we did reject after taking our local liquidity from our local highs, it was also a pitchfork band of resistance that used to be support. Since we lost it, it was being flipped to resistance. So took our liquidity of our local range highs, hit into the pitchfork, and we dumped, started making new lows. And now what was our micro range on Friday, this little guy here, you can see now is acting as a resistance for us. We lost the range, dumped, came back up to backtest that range, failed, and now we are dumping and continuing the dump to the downside. So overall, Bitcoin is near support. I do think this weekly level will give us a good bounce. It's our golden pocket. It's our macro golden pocket from this entire bearish move to the upside. Bearish correction on the daily chart. Let's go ahead and go on to the daily chart, because for a while now, any of you that follow my YouTube channel or are with me here in the Discord, I've been looking at this general push to the upside here since the 76.6K lows as a corrective push to the upside before continuing our bigger trend in the distribution that we are seeing, our bigger trend to the downside where we hit our more macro support levels that are on the chart, being that golden pocket between 72K and 70K, which is also the previous range value area high in that area. So overall, I do think we could see a bounce from our weekly level to make another lower high, and that will take some time. That could take a couple weeks, but I do think this overall downtrend still has some momentum left in it, and I do think we can continue pushing lower overall with bounces along the way. What's up, Dobby? How you guys doing? Thank you guys all for joining. Awesome. Thank you guys. All right. So let's go ahead and talk about what is happening here with this. This whole thing was a correction. We were looking at a major point of this correction to end, not only at our intermediate range value area high. So if we go ahead and pull our volume profile, we're going to pull our volume profile from after the impulse to the downside ended. This area here was a clear impulse to the downside, with the start of it being the Bybit hack, which was kind of the catalyst to get us there. And then we just dumped in a 112 impulse to the downside. After that, we saw this three-wave corrective Trump tweet. That was when Trump tweeted about the reserve, and we pushed up like, what was it, $14,000 or $17,000 over the weekend. But ever since this area, you can see here, let me go ahead and delete this real quick again. You can see that we have been making three-wave moves on the chart. Well, you know, zigzag move to the upside in a correction. We rejected from our 786, from the highs to the lows, rejected from our 786. Then we had a bigger ABC correction to the downside, ending at our 1.236 fib target for the C wave. Perfect bounce from there. We were looking for the long from there based off of that and based off other high time frame pitchfork levels of support. And we had the grind to the upside. Anytime you see a grind like this to the upside with low volume overall decreasing on the charts as we are making that move to the upside, that tells you clearly that this has a higher probability of being a corrective move to the upside before ultimately rolling over and coming down to supports, or even coming down to make new lows below the lows that correction started from. this area here at 76.6. So yes, I do think we can see bounces. You can see on Bybit here, our value area low is a bit higher than on Coinbase. But overall, I do want to see us come down, hit the value area low, wick a little bit past it to actually hit our weekly level. I want to see a reclaim of the value area low. And once we reclaim the value area low, I will be looking for longs in that area. In this green box of support here, I will be looking for longs to the upside. We want to see proper confirmation of that. So what are we going to be looking for proper confirmation of longs? Well, we're going to want to see some bullish CVD coming in on the charts on whatever oscillator you use. I like Market Cipher B. I use Market Cipher B and I've been using it for a while. If you guys do not have Market Cipher B, you can use other indicators like the Awesome Oscillator or the RSI, Stochastic RSI, whatever you can use to give you confirmations to enter the trade. Or if you have a completely different strategy at all where you do not use indicators at all, that is okay. But you want to see some sign of support come in here. Market structure breaks on low time frames, bullish shifts in market structure. But we want to wait for support to be hit before longing. If you're longing now, you're longing kind of in the middle of nowhere, and there is a higher probability to come down and make that low. But very locally, I want to talk about what happened today, very, very locally. So let's go ahead and zoom in onto the 15-minute chart, because we did get a swing failure pattern of yesterday's lows. You can see here on Saturday, we had these lows. And earlier today, we did get a confirmed swing failure pattern, came down, took out that low, grabbed the liquidity from that low, and made a decent move to the upside. We moved all the way to the VWAP. Now, if I took this trade, VWAP would have definitely been a TP1 for me based off of the VWAP acting as resistance all day long. So you are in a trend, and in a trending day, the VWAP often acts as support or resistance. That is a TP1 area. Move your stop up to break even, risk-free trade. You let the rest ride just in case we do pump to the upside and continue this pump to the upside. If you get stopped on it, okay, fine. Enter another one at your other levels of support. So we are starting to develop some bull divs on the chart. You can see locally here on the 15-minute chart, lower lows on the price action, higher lows on the momentum waves. But this money flow does not look the best for me. 15-minute money flow still coming to the outside. And I mean, we're just kind of forming almost like a sort of triangle type pattern here, which is a consolidation and a continuation pattern. So if you dump into that pattern, you do have a higher probability to dump out of that pattern. Doesn't guarantee it. It just increases the probability to dump out of that pattern. Just simple pattern trading. All right. And if we go ahead and zoom out onto the 2-hour chart, you can see that we are starting to develop some nice bull divs. If we could come a little bit lower, hit into our actual support level, we would be making nice lower lows on the price action. We would see 1, 2, and depending on how this wave curved here, if it came a little bit lower, 3 drives of bull div on the 2-hour chart into a major support level with money flow bottoming out and starting to curve to the upside. So for me, this level already is giving us indications that it could be a safe long to play from this area if we continue down there and continue to have confirmation on our charts to enter the long trade. So that's kind of what I'm looking at right now. We do have to now worry about the point of control acting as a resistance. And if I go back to the Bybit chart, you can see that the point of control is in confluence with our pitchfork band, our bearish pitchfork band that is in this area here. So even if we do come down, bounce, I would be looking for a TP1 at the POC of the range. Maybe we come form a higher low and start to do that bottom reversal pattern of an inverse head and shoulders, see a bigger move up to our golden pocket, and then continue the dump to the downside. Now that's too early to tell. That's speculation right now on the charts. We'll have to wait till more data develops to give us more information. But for now, we can just keep watching Bitcoin, keep watching for it to continue dropping slowly to hit into our level of support. I do think that it could continue to range overnight until New York opens tomorrow morning. We know that a lot of the major moves are made during New York trading hours or during the weekly trading hours, I should say, not on weekend price action. So I am looking for a potential for a range to form in here, come down, maybe Monday morning, hit into our support level, and make that push to the upside. What's up, guys? Thank you for joining. Appreciate it. Awesome, awesome. You guys, is the sound okay, you guys? Is sound okay? Is music too loud? Music okay? Not good. Yeah, definitely not a good time. John Cena, thanks for joining, man. You know you are part of Frankie Candles, the Candle Mafia, and Frankie Candle's awesome. Super awesome, man. Just a genuinely good dude that wants good for his community and a beast of a trader. All right. Thanks for the TA. Yeah, thank you guys for joining. I appreciate it. How are you getting your weekly levels? Okay, I can show you how to get the weekly levels. It's really simple. So you're just going to zoom out onto your weekly chart here. And I marked this weekly level out. It only confirmed 22 minutes ago, but I marked it out because I knew we weren't going to pump all the way up here in 2 hours. So I marked it out a couple hours ago. But what you want to do is you want to come in on your weekly chart here. Let me just delete this real quick. And you're going to look for when a candle body, a green candle body and a red candle body open and close in the same area. So you can see right here on the charts, we have the green candle, red candle body closes right in the same area. That is going to be a weekly level. You can also see up here on the charts. Let me go ahead and hide this real quick. You can see up here on the charts, green candle body, red candle body closed in the same exact area. We have a weekly level at 96,266. Now we've been dumping. You can see here weekly support because the candle bottom of the body and candle open here are at the same level. So that's a weekly support, 80,700 on Coinbase. On Bybit, it's a bit higher. So what I just do, you can just go into your indicators. You just turn your magnet on so you're nice and precise. You just click it on there. I have a template up there where I just come in here. I use my weekly level. You can mark it out here on the chart. So you got your weekly level there. And it's the same thing with daily levels, by the way. You just go on the daily chart. Daily chart, you can see here we have a fresh daily level at 87, what was that? 87.2-ish. Here, 87.217. Come in here, mark that out as a daily. I already have that marked out. It's already here in my charts. Got my daily levels marked out here. So yeah, we're continuing to dump. Now, while we're here on the daily level, I want to go into something now. Because what we were looking at when we were coming into our 76.6K low, we do remember that it was the end of the ABC correction target to the downside. So if we go ahead and pull our trend-based Fibonacci extension, we go from the highs of A to the lows of A to the highs of B. We turn on our ABC target zone, which is between the 1-to-1 and the 1.236 target zone. Look at where we ended. And this is one of the major reasons why I was looking to long exactly 76,600, because it was a major end of our ABC correction target. We also had bull divs on the charts on Market Cipher B, giving us confirmation to enter that trade. Lower lows on the price action, higher lows on the momentum waves here, giving us that signal and that confirmation to enter along in this area. Now, when we entered this long, right away, I did talk about we still do have a higher probability overall. It could take some weeks, but we do have a higher probability to continue dumping to our more macro targets of support on the downside. I don't know if any of you guys caught my video from a couple months ago, but we were talking about a distribution range. Let me see here. We were talking about a distribution pattern that was happening. And you could count this distribution pattern as it works for me. I looked very closely at this. It worked for me both as a Model 1 and a Model 2 distribution pattern. Now, I know some other people were looking at this as a possible redistribution pattern, similar to what we saw of this redistribution here in our Wave 4 Elliott impulse on the weekly impulse to the upside. But knowing that we were at the top of a major cycle channel, knowing that, let me get this here. All right. Knowing that we were at the major top of a weekly cycle channel and looking at our confirmations, our Market Cipher B here, we could see here on the charts, making higher highs through all of this while making lower lows here, confirming bear divs on the daily, money flow topping out here, came in for another higher high, another drive of bear div here, money flow continuing to drain from the asset as this range develops, giving me a strong bias that this is not redistribution, not reaccumulation, that it is a distribution pattern, and that we are going to end up breaking this range to the downside and continuing the distribution to where our whales accumulated the last time. So let's go ahead and go into this real quickly. Let me go to my other chart. Here we go. I'm just going to hide some of this local price local pitchforks, and I'll go into the pitchforks as well. This pitchfork here is pulled from the last bull market. Any of you that are in Jason's Discord, you've seen me talk about this many, many times. But we had a very, very clear 5-wave impulse to the upside on our weekly time frame. That's the wrong one. Here we go. So if any of you guys know anything about Elliott waves, generally you start a bull market in a big 5-wave impulse to the upside. And this is on the weekly time frame. If we go out onto the weekly time frame, it's very clear that this is a 5-wave impulse to the upside. And at the end of the 5th wave, you are expecting a bigger ABC correction to the downside. Now, where can we expect that ABC correction to end? Well, we're going to look at our prior range of balance in the market, where we had balance in the market, where whales were willing to buy to push the price of Bitcoin up. What used to be resistance for us is now being tested as a support level to see if Bitcoin and the market wants to consider Bitcoin's fair value at higher prices. We lost our range above the pitchfork here, telling us that the market wanted to distribute and look at the fair value for Bitcoin and revisit our prior range here. We are still in that process. This process will take some time. Markets don't make moves overnight, especially with huge liquidity like this asset here. So first of all, this pitchfork was pulled from the prior bull market. 65K highs down to our summer 2021 lows, up to 69K highs. And you can see here, let me go ahead and I'm going to hide this 5-wave impulse so that we can look at this. In this area, this pitchfork band up here, you can see this pitchfork band was a resistance in 2024 in our 7-month accumulation range. It was resistance. Every time we would come up to the top of it, rejection, 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 rejection here. Finally, with the fundamentals that happened with Trump winning the election, we were able to bust back, break above it, even break above our pitchfork, back tested our pitchfork as support and made a new all-time high. So the pitchfork was holding now, similar to a volume profile. When you break a volume profile to the upside, you will often come back down to back test that volume profile's value area high to flip it to support to continue higher. Well, just like that with the pitchfork, we back tested it, continued to new highs, but then we started seeing weakness in the asset here, money leaving the asset over time, showing us a possible distribution pattern. And you can see here, once we actually broke back into the pitchfork, we had one big wick, but closed that weekly candle above. And then the very next week, we had the confirmation, a big volume push to the downside, confirming that the market wants to come back within the pitchfork, trade back within these levels here. And we bounced from the pitchfork band of support. So what used to be resistance is now being tested as support. We are seeing a bounce from that area, but this bounce is not as strong as we would like to see here. There's no real volume coming into the market. If we zoom in on this chart, let's just go to the 4-hour chart. You can see that this entire push up has been no clear impulsive price action. You know, 3-wave move, 3-wave move, 3-wave move. WXY complex correction to the upside, finished, dump. We have not seen any clear impulsive patterns to the upside to let us know that this is more than just a corrective move. And this is a high time frame corrective move, so it will take some time to play out. It will take weeks to months to play out. It has played out. If any of you have been watching my channel, one of the main reasons I was looking between 88,000 and 88,600, well, there was many different reasons, but if we do our Fibonacci pull from the highs of the A wave to the lows of the C wave of this bigger ABC correction, we go ahead and pull that golden pocket over. The golden pocket of that move was here between 88K and 88,600. We also had a naked weekly point of control. We had a naked daily point of control in there as well. And we had the value area high of our range since the impulse ended. Now remember, we're pulling this volume profile this way because we saw a clear impulse to the downside here, with the start of the Bybit hack being the catalyst for the impulse. 1, 2, 3, 4, 5, or you could do a double 1, 2. Either way, it's a clear impulse to the downside here. Our impulse finished, and we had a 3-wave corrective move to the upside. Anytime you see an impulse followed by a 3-wave corrective move, you can expect more downside to come. We saw that big ABC correction to the downside, and since then, we have just been slowly, arduously grinding to the upside in an ascending channel. By the way, I was showing this ascending channel on my channel and in the Discord for a while. Let me get back to my Coinbase chart. Here we go. We were in that ascending channel to the upside. And I did say, as long as we do not lose this trend, we will continue to grind to the upside. Because I was looking to come up to about 90.5 to 91K as a possible move based off local price action. But ever since we were down in this area, I was talking about one of the major levels that I'm looking for Bitcoin to come up to was that 88K level. This box of resistance here on the charts between 88 and 88,600. You can see it was our channel midline. I mean, there was just a lot of confluence in this zone of resistance here to look for a dump to the downside. We got that dump to the downside. We are losing key levels of support. And so now we just wait. We have to sit on our hands, be patient, and wait. One of the major things that gets traders wrecked is they like to overtrade and they do not wait for the chart, for the market to come to them. They try to FOMO into every single little trade here or there. If you can be patient, sit on your hands, wait for the market to come to your levels, always, always, always make a plan for your trade with proper risk management and stick to that plan. And if you guys can learn how to do that over time, you'll develop the habits you need to be a long-term successful trader. Okay, I'm going to check the chat here real quick, see what you guys are saying. Cool. Okay. Yeah, thank you, Roy. Smash the like, guys. Also, I want to give a shout out to my sponsor, MEXC. There is a link in the description to join MEXC. MEXC is an official partner with me. I do also have some other official partnerships in the works coming. And so if you guys want to trade with MEXC, I've got you discounted fees, and then you can also get up to $20,000 in futures trading bonuses. I think you get 10% cash back on your deposit. You can scan the QR code or use this link when you sign up, and it's an affiliate link, so I do get a little bit of kickback from it. But you guys, it's a win-win situation because you guys also get discounted fees and all that good stuff as well. So that's one way to help support the channel. Another way to help support the channel is just hit the like, subscribe, you know, all that good stuff that we as YouTubers say. So yeah, thank you guys. Thank you, Roy, for telling everyone to smash the likes. Let's see. Hope for another tweet. Okay. Yeah, Fu Manchu. I've never used Fu Manchu, so I don't know, to be honest with you. I think the regular official market cipher B has one of the best money flow indicators on the planet. And money flow is so important in this market because, as we know, money runs everything. Money runs the markets. So this money flow indicator is a very good indicator. That's how I knew when we were in our prior 3-month range up in this area, my bias was bearish based off money flow draining and leaving the asset during that entire range forming, looking at a possible distribution pattern to the downside. Yeah, you're right, John Cena. Not a good time to long. I mean, we are seeing some bull divs on the charts, but we are not at support yet. Like, why would you long before support is hit? And I'm not talking about you, John Cena. I'm talking about just in general. Why would anybody long in the middle of nowhere? We did have a small SFP earlier today, which you could have taken as a scalp, and it would have been a winning scalp, at least a TP1 win, because we did make it up to the VWAP. But now that we are seeing weakness on the charts, we can look for new lows to come in. Overall, our bigger trend is bearish. Look at our money flow right now on the 15-minute chart, coming out aggressively here. Our momentum wave to the downside is starting to blow out, possibly invalidating our very local bullish divs that we could make. So, when we're here right above a more macro support level, just wait for support to be hit. And if we do have confirmation, by the way, I can walk you guys through how I'm going to be looking to trade this. If we get this live during the stream, we can calculate our position size based off where our stop loss is going to be, where our take profit levels will be. And, I like to use a crypto position size calculator here. We just use this calculator. You can do it. There's many ways to do it. So I've been using this one for a while here, but we can walk through proper risk management, because one of the things, if you want to be a serious long-term trader, risk management is the most overall key thing to understand in these markets. If you have poor risk management, you can win 10 trades in a row, and your 11th trade, you are way too heavy on your risk. You lose that trade and you lose 50% of your portfolio. Well, all your hard work is gone. Now you're going to have to make up 100% of your portfolio just to get back to break even. So risk management really, really, really is the biggest key to this. Of course, finding and knowing the proper levels of support and resistance is very key as well, and looking for confirmations to enter the trade, not just setting a random limit order hoping it's going to bounce. You really want to wait for signs of strength, signs of confirmation to enter the trade. But all these things in combination will help you be a long-term successful trader. All right, let's see here. Yeah, John Cena, value area low. That's, value area low, right below it's the weekly. So what I'm looking at right now, I am looking at, and of course I'm following Coinbase's charts. But okay, let me finish real quick talking about this channel. So we broke this channel to the downside, and anytime you break a channel to the downside, generally this is a trending move. And generally, anytime you break an ascending or descending channel to the downside, you will sweep all those higher lows of liquidity down to at least the second pivot of the channel, if not the entire liquidity of the channel, all this liquidity that's been building here. The market makers like to sweep out that liquidity. But the first really key level to look for when a channel like this breaks to the downside is that second pivot of the channel. Well, look at where this second pivot of the channel is coming in, the SFP into the weekly. So not only do we have a key liquidity grab into our weekly level of support, into our golden pocket, value area low down here, naked daily point of control just a bit lower, we have a lot of confluence to find a bounce in this area, even if it's going to be a bounce up to our golden pocket, where we then roll over and continue down. But that is a level that we could be looking for at least a day trade or scalp trade from. So yes, value area low. And John Cena, what I would like to see, if I pull this volume profile, I would like to see, oh, look at our value area low is actually shifted down too. Interesting. So value area low has been shifting a bit on these. I'm just going to do, because when you see an SFP, guys, you want to see a little bit of a wick past that level to actually stop out all the liquidity below it, all the stop losses below it. So I want to see that wick past into this general area. You can see our Coinbase value area low has now shifted. It's pretty much right on top of that weekly. So I want to see a move down, the SFP happen with a decent wick into our weekly chart, into our weekly support, see a bounce and like a 15-minute candle close at or above the value area low. If I see that, I will then zoom in on the charts, enter long, mark it in from wherever we're at with my stop below the low, looking for a move to the upside. We might get this during the stream, guys. This is going to be awesome. First live stream, we're actually getting some real price action. Any of you guys that have been in Jason's Discord, you know how painful it's been the last, except for Friday. Friday was good. All right, so I'm going to go ahead and get rid of this channel now. We know the second pivot of that channel is a key liquidity grab into our more macro support. I would say intermediate support, not macro, but this is the level that I'm watching. Also on Friday, I did talk about this anchored VWAP. This is the anchored VWAP from the 49K lows. So all the way from our wave 4 weekly impulse lows. Let me zoom out on the chart here. right down here, this guy right down here, this key low down here, which was our low of our wave 4 correction before our 5th wave impulse to the upside, completing that 5-wave impulse to the upside, starting the distribution. Well, that anchored VWAP is coming in here, and I did talk about on Friday, if it happens quickly, we could see one more low into the anchored VWAP and then reclaim the point of control and continue up higher, but we did not. We busted through it, and you can see we back tested it as resistance. What used to be holding as support was flipped to resistance to continue the move down. So just simple support resistance flips in the market. Looking at that, you know, you don't have to overcomplicate your price action. Actually, I think the cleaner you have your charts and the simpler your strategy, the better it can be overall. I know a lot of people that have a million different levels all over their charts and they get analysis by over paralysis, or they try to over trade because there's so many levels on their charts and they're looking, okay, maybe this one could be the one. Oh, maybe this one could be the one. Maybe this one, this one, this. And so if you understand, try to look for levels where there's the most confluence possible, and look for your confirmations to enter the trade when you're at those levels. Do not trade if you do not have a plan for your trade. Always make a plan, because if you don't have a plan, then how do you calculate your stop loss? I mean, you could set it at the arbitrary 1%, but overall, you want to be looking at technical stop losses as well. Okay, sound is good. Can't really hear the music. Oh, okay. Let me see if I can fix that a little bit. Is that better? Yeah, okay. Yeah, Frankie's amazing, dude. Frankie really is amazing. Can't hear the music. We hear it loud and clear. Okay, can you guys hear the music a little bit better now? And Kajus, I use both the anchored VWAP and the regular VWAP. So it depends on what type of trading you're doing. Usually the anchored VWAP, you're pulling from more macro swing high or swing lows. And you're looking at that because what an anchored VWAP is, well, what a VWAP is, it's the volume weighted average price, right? So it's taking the average price of all the candles, but it's weighted based more off of the volume inside each candle rather than just the average price action with inside each candle. So it does take into account volume. If you guys have been following my channel since I've made it, the two things that I harp on all the time is volume runs these markets, liquidity runs these markets, volume and liquidity. So the anchored VWAP is, and the VWAP in general, is much better to me than a regular moving average because it takes into account the volume of each inside of each candle. So yes, but I do use both of them. So like for instance, now we have a very key high up here at 109. We can turn on an anchored VWAP from that area, and you can see that our anchored VWAP from that area is coming in around our previous range value area low. If we look at this previous range here, you can see that that previous, I'm just going to pull it from right before the impulse, previous range value area low, right around our anchored VWAP. So now that we know, say we do come bounce from this golden pocket weekly level, and we do actually make a higher high, this area up in here is going to be a very key resistance because it was our support for three months or so here. Now it's going to be acting as a more macro resistance level. Also, we can look at the big range that's here. We were in a range up here. Now we're trying to determine the fair value of Bitcoin within a bigger range. And I just realized I pulled this volume profile wrong. That's why I'm sorry guys, the value area low didn't shift. I'm just an idiot and I was zoomed in. So we need to pull this volume profile to this low here. All right, now we're at the okay, my mistake. I'm sorry about that, guys. I was too zoomed in and I wasn't paying attention to what I was doing. Okay, so we're touching the value area low right now. Pretty much. Let's see what happens here. Let's zoom in onto the 12 minutes. You know, we are possibly developing some local bull divs on the 12-minute here, but money flow's still leaving the asset. I don't like it. 5 minutes still coming out. I mean, we do have potential 5-minute bull divs. I want to see a little bit lower. If we start to bounce from here, well, what I think is possible is we start to range around the value area low, and maybe tomorrow morning when markets open, make that one last low, stop out the early longers into our weekly, into our actual box of support, and then make that move to the upside. Okay. All right. So let me check here. Okay. Yes, bull dibs are forming right now. Let's see. Are we going down, bro? Trump is on a madness. Yeah, well, listen, guys. We know tomorrow's the end of the month, and we know that in April, the tariffs are starting. And I know that a lot of technical analysis will say trade the charts, not the news. But the news does have some effect on the charts, especially if it's macroeconomic news like this, that's worldwide macroeconomic news. So, of course, I trade the charts first and foremost. I trade technical analysis first and foremost. But I do pay attention to what's happening. I don't live under a rock. We want to pay attention to the bigger things that are happening in the world right now that could be catalysts for bearish or bullish market manipulation. I don't even want to call it manipulation, bearish market catalysts. So, great TA. Oh, thank you, Manuel. Thank you. Your daily videos are great, man. Thank you, Kara. I appreciate it. I try to put them out every single day. I try to hold nothing back for you guys. Diamond Palm, welcome, buddy. It's good to see you in here. Good to see you. And Jesus of Nazareth, thank you, man. Yes, I'll take a look at ETH. I will take a look at ETH. Okay. Okay, so not bad for the sounds. Okay, music. Can you guys hear the music now? I think I'm behind in the chat. Hold on here. Yes, this is the first live stream on my channel, John Cena. I just started this channel about two and a half months ago or 2 months ago. I've been trading for a while. I've been in Jason's Discord for a while. Jason encouraged me to start a channel. I did start a channel, and it's growing quicker than I ever thought it would. And honestly, I'm super grateful for the support that I'm getting. I'm super grateful. I love doing this. You know, very similar to Frankie. Frankie just loves helping people. And Frankie's a strong believer in if you put out good into the world, you'll get back good. I actually is a very, very strong believer in that. You know, whether you want to call it karma or whatever you want to call it. But to me, and also, I mean, it's the right thing to do, right? Or I guess I don't know. All right, so I've been warning everyone this was coming. They laughed, forcing me to believe this was coming further. You know what, Zigzag, you could be right there. But here's the thing, Michael Saylor's, it's his break-even range is at around 66K. We know if we go onto our liquidation heat map here, let me go ahead and go onto the liquidation heat map. I'm going to go to our Model 3 heat map, and we're going to look at the 2-week time frame. You can see, maybe it was a little bit longer than that. Let's go to the 1-month time frame. Yeah, you can see down here, 67K, 66K, we have some major liquidity resting down there where that break-even level for Michael Saylor is. And, you know, I think it's the strongest level of liquidity on the charts right now. We do have some liquidity up here around 88, 89K above our highs from this from this daily correction to the upside, but the majority of the liquidity is lower. And as we know, let me go ahead and zoom out. Let me get to the bigger chart here, and we'll zoom out. I'm paying attention to this price action, guys, so don't worry. I think I have an alert set on the weekly. But as we know, this volume profile, this was a range where there was balance in the market, where people were trying to find the fair value of Bitcoin, establish the fair value. We broke above that range. So oftentimes when you break above in healthy markets, you will come back to backtest what used to be resistance as support to see if the market wants to confirm higher prices for Bitcoin. Now that we're losing this upper range up in here, there's a very high probability that we at least come back test the value area high, which is also around our macro golden pocket, right? If we do a golden pocket pull from 49K up to our all-time high, you can see that between 72K and 70K, we have the value area high of our ranges up there. Let's just do that. Value area high at the back test of the golden pocket. But if we lose this and we re-enter the range, the strongest level, we know the point of control is the level where there's the most volume in this range. It's considered the fair value for the asset in this particular time frame or this particular range of price action. And the point of control is a very, very strong support level. Once you break a range to the upside, if you do lose the value area high, the point of control is the strongest level there is. And we know, look at this, the point of control is different depending on exchange, but on Binance, it's around 63K, you know, 63, 64. I believe Bitcoin, it's a little bit different here on Coinbase. Excuse me, it's a little bit different. Well, actually, it's about the same, depending on how you pull this range too, because you can pull it from the highs here at the end of the impulse, just the corrective price action. Anyways, down there, 60, 64, 63K, and that would be below Michael Saylor's break even. But I don't think that that's necessarily a margin call. You got to remember, he's buying spot Bitcoin. So he would be in serious trouble down there and have a lot of pressure to be selling, but I don't think he could get margin called on it. I know that he does have some loans out against Bitcoin though. So I could be mistaken on that. Let's see here. Dump this. Okay. So yep. If you were blank. Yeah. Would you want Saylor? You're right, man. Zigzag. You're right. BlackRock is a major competitor to him. So if you do see a bounce from 80 to 81K, any idea where Bitcoin could go? Very good question, Kajus. So let's zoom in here, because what we would be looking for, let's talk in terms of more macro price action. Okay. So we've had this grind to the upside here. We lost that key trend of the ascending channel. If we bounce from our golden pocket, there is a small probability, or I'd say a decent probability, that we could be putting in a higher low to continue higher. But what I would be looking for, if I'm going to long this area, let me zoom out just a bit more. If we do long that area and bounce from that area, what we can do is look at confluence for resistances. So first and foremost, you could pull your golden pocket from the highs. I'm just going to put it on the weekly. This is a theoretical fib right now. This fib is speculative. We have not done this yet. But look at where our golden pocket is coming in, at that fresh weekly level that we just marked out, right? Now we can come in and we can look at our naked daily points of control. Do we have a naked daily point of control in here? I think we do have one around there, if this thing ever loads up. No, not there. Let's check our naked weeklies. I think. No naked weekly. We have one up here though. You can see a naked weekly up here. But we can look for other confluence there as well. So we have a weekly, we have a golden pocket, but also just think in terms of market structure. This was holding as support of this small range. It was support. Now, if we come back up there, it might be resistance. So we also have an SR flip level. Look at resistance, support. Could it be resistance now? So there's support, resistance, flip level, golden pocket, a weekly. It is in the middle of this range, and generally it is kind of risky to take a trade in the middle of the range. But if you do have confirmations here and there's confluences of resistance, that's where I'd be looking. But that's our overall target, or one of our bigger targets from a bounce from this area, because Bitcoin's going to have some work to do to get up there. First of all, we're going to have to bounce from here. We're going to have to reclaim this anchored VWAP. We're going to have to reclaim the point of control and then work our way up there. So the point of control is going to be a tough nut to crack. Oftentimes when you lose the point of control, like look at in this area here, we deviated the value area low, came back in, bounced from the value area low. We're finding a lot of resistance at the point of control here. Back tested the value area low bullishly one more time, finally busted through it. Once we busted through it, it flipped to support in this area, and then we came to the value area high. So now that we are doing the same thing but backwards at the value area high, came to the point of control, tried to bounce, didn't, coming down to value area low, we can look for a move back up to point of control to see if the point of control is going to reject us and we continue down or not. So point of control is going to be an important level to be watching. And we can look at other levels once we get there as well. But just that's a general quick summation of that. So, okay. So yeah, did I answer your question, Kajus, about the anchored VWAP versus the regular VWAP? I use both of them. The regular VWAP is really good if you set it to daily or session VWAP to look for in trending days like we've been seeing today. The VWAP's been rejecting us all day, so it's really good for scalps or learning, finding levels to take profits on like long scalps in a bearish trend. But the anchored VWAP I use for more macro price action, like we could set now a new anchored VWAP from the 76.6 lows. And look at that, our anchored VWAP is coming in right around that point of control. So there's more confluence for a resistance level, right? So just, different things. And they generally line up pretty well with other confluences of support resistance. Okay, we're coming down to 74. Yeah, I think we're coming down zigzag to 74, if not lower. We could see a good bounce from 74. I'll go into some of the higher time frame pitchfork levels in just a second here. I'm sorry, I'm so behind on the chat, guys. Just got here, heading back to the start. Andrew, welcome, man. I appreciate all your support you always give on the channels, always commenting. I appreciate you, man. Trap the mouse game, wait for the trap. Yes, Roy, it is. Wait for the trap. You set your trap and you wait for the market to come to it. You don't go chasing the mice around, the rats around. Did MEXC open back up? So, zigzag. MEXC does have KYC. I have a Palu ID, and if you have a Palu ID, then you can trade on MEXC because you're a dual citizen, right? You're a citizen of Palu and you're a citizen of wherever you're at. And so I use the Palu ID, and with the Palu ID, it works just great. CRV, yeah, I'll look at CRV. I have ETH and CRV, so don't let me forget, guys. Fu Manchu is not the same. Yeah, I agree. Thank you, man. To build a copy of Money Flow. Yeah, yep. I have a lifetime subscription to MCP, so I don't need to do that. But if anyone doesn't, I understand. We dumping. Yep. Where would I short? Well, I'm not looking for shorts right now, man. We've been dumping. We're close to more macro support levels, so you cannot. I would say it's bad risk management to short right now. We missed the short. The short, you could have taken a short on the bearish backtest of the anchored VWAP up here. That one, we would have to zoom in and see if we were seeing low time frame bear divs up there. Where's that at? It's up in this area here. I hate how that does that. Look at how TradingView moves the anchored VWAP up to here. It should be down here. We know that's the correct spot for it. And now it's back down there. But yeah, actually we were seeing some stuff. The money flow looked pretty strong here still. But yeah, you could have taken a short up here. You could have taken a short once you lost the point of control after trying to break above it. You can see we lost it and back tested it right here in confluence with the VWAP. You could have shorted right here, stop above this local high and brought it down. You could still be in that short. But right now, look at where we're at. We're really close to macro support. We're pretty much at macro support, more macro support. You cannot short here with good risk management. If you're going to short here, you're going to short this. You're going to have to put your stop above those highs there. Or even if you wanted to above like the first local high, and you're going to be targeting the weekly. That's a horrible risk reward ratio. That if you try that long term, you will ruin your account. So risk reward ratio. Remember, asymmetric risk reward ratio. You always want to have a 2.5 to 3 risk reward ratio or higher. And if it's a 2.5, you better make sure that you're confident on that trade. You have proper confirmations to enter it. So the bigger the risk reward ratio asymmetrically in your bullish favor, like the higher this number is, the better. Okay, so right, John, Candle Mafia, John Cena, I think everyone has learned from their mistakes over the years, and I almost think that you have to pay a tuition to the market, right? Your tuition for learning how to trade is getting wrecked multiple times. And I've done the same thing. I also bought in at the all-time highs back in 2020. Like 2 months before the Coinbase listing in like February of 2020. So I learned my mistake there as well. Dominance, USD dominance is going up. We'll check that out. El Hijo, I'm sorry I can't pronounce your name, but thank you, dude. I appreciate the support and love. Thank you so much. And I'm sorry for butchering names. I really just suck with that. Yeah, we are going to create a CME app, guys. Actually, it should be created now. So, to be perfectly honest, I don't want to hear the music. Is the music too loud now? Is it too loud? Because I'll leave it on a little bit. Let me do this. Is that better? Yes, I use open interest in CVD. It's not CVD, cumulative delta volume delta. So here we go. And actually, we can look at this here. Let me refresh this. Come on. You know what's weird? When I stream, sometimes my things don't load up. It's just when I'm streaming. We're not seeing much locally here. You know, we are making lower lows in price action here, so no bullish CVD absorption happening. Open interest is coming up. So here's the thing, guys. What is open interest? Open interest is the amount of new positions opening or closing in the market, right? So our open interest has been increasing since we rejected from the VWAP earlier today. You can see rejected from the VWAP here. Open interest has been increasing ever since. Our CVD is our aggressive market participants, right? So you can see if we do a vertical line, let's just throw a vertical line on the chart here, where that was. I'm going to just change it to 1x so it's easier to see where that high was. If we come down and look at our CVD from that area, our CVD has been in a steady decline from that area, meaning that more aggressive participants are market shorting. And we know they're new market shorters based off of our open interest increasing. So we know that new shorts are coming in the market off the rejection from the VWAP, successfully pushing the price lower and making new lows on Bitcoin. You know, this is not a long squeeze that we're seeing right now. This is a true push to the downside, supported by new positions entering the market. So now that we see that, we can just wait. We have to wait for some sort of confirmations to come in here. With CVD, I do look for bullish absorption at the bottom, like at support levels and stuff like that. We're just not seeing it yet. Let's go ahead and zoom out a bit here. Now, CVD does work better more locally, but I do look at CVD. If you think of what CVD is, CVD divergence is, it's divergence of whales absorbing retail, really. That's what absorption is, when bigger players are absorbing the small retail traders in the market. So if I can find this CVD, let me do that. Okay, let's go on to the 30-minute chart. All right. So from the 76.6 lows here, you can see right now we are making higher lows. Our price action's making higher lows. Our CVD from that area is overall declining. Our open interest from that area, I would say it's kind of flat. You know, it's been all over the place. If our open interest was more steadily increasing, not doing this jaggedy crap here, then I would say maybe there's a possibility we are building bullish CVD absorption at our key weekly support level to see another move up. We're not really seeing that. Now, that doesn't mean we are still seeing some bullish CVD divs. It's just not bullish CVD absorption, which is much more tradable, much stronger, and a much more clear move. All right, I would say clear confirmation. So yes, I do use CVD and open interest. I think it's one of the best tools to use, as well as market cipher, other things like that. So to be perfectly honest, I don't want to hear. Okay, vector zones below. Yeah. So okay, we do have some vector candles. All right. Money flow is still weak for buyers. Yes, it is. It is. Do I think Asia will dump on the market? I do. I mean, I think the trend is going to continue, or I don't necessarily think it's going to dump. We are at kind of support, right? So oftentimes when you're at support, look at what happened at resistance, by the way. We were at the value area high. What happened? The most probable scenario is you start to form a range for a little bit, and then you make the move. So it is very possible that we start to form a range at least overnight until New York opens tomorrow. Come down one more time, grab that weekly level, see the move up there. So I think that Asia could be boring. Asia and London could be boring based off of that. But look at, that's a nice reaction. Dang it. Nice reaction from the value area low. I still want a little bit lower, guys. I understand it is the value area low, and that is a valid level to look for a long from. We did have a daily level at 81K. If I go ahead and turn on my dailies here. Okay, dailies even lower at 81,071. So see, we had front run the SFP. Now this is really important, guys. Anytime you front run a swing failure pattern so closely and you get a push up, like if this keeps pushing up and breaks market structure bullishly, if we keep coming up here and break this high here bullishly, then the next time we come back down, if we do roll over, the next time we come back down, this SFP has a lower probability to actually work out. It could just flush straight through it because we front ran it. So anytime you see a close front run like this of the SFP, we just need to keep that in mind. It could not work out, and we could flush straight through this. But this is a nice reaction. If any of you took this trade, I understand why. I had a plan to long in my green box and I did not get there. So I am not longing. But locally, I mean, like, look at the money flow here, guys. Are you really going to look? I mean, yes, we do have bull divs. Lower low, lower low, lower low, lower low. Higher low, higher low, higher low. Here, 15-minute bull divs. If this next 15-minute candle closes green, we could see this start curving to the upside. But it's not enough for me. I want to go down to actually support. Hourly chart. Money flow still really bearish here. Momentum wave is still kind of blowing out here. So for me, I understand we did actually hit the value area low on Coinbase, and I know that Bybit's value area low is even a little bit higher. But I'm not... I want to see us come a little bit lower. I want to see us grab that liquidity. You know, the market runs off liquidity. We haven't grabbed the liquidity yet of these lows here. So really want to see that. But this is a nice reaction. I understand if you guys took this trade, it's a nice reaction and it's good for a scalp. So what can we look at? This daily level, I believe that's a new daily level. Let me double check. No, that's not a new one. So we busted through that earlier today. You could still backtest it because there was no reaction here. You can see there was no reaction there. I don't know. I mean, once a daily level's been hit and busted through, I tend to take it off the charts. But yes. Okay, you guys, I am going to move on. Remind me in the chat. Actually, let's just do this to make sure. Okay, set an alert on the weekly so that if this happens during the stream, we can come look at this. But let's go to our more macro chart here. And I want to talk about some things that are happening here. Daily time frame. We're on the daily time frame here. So one of the reasons we were looking for a major bounce from this 76.6 lows, not only was it our ABC target zone, but you can see it was that pitchfork band that was a high time frame resistance in 2024, now being tested as support in 2025. If I come in on my charts and I turn on my other pitchfork level, so this is a modified skiff pitchfork pulled from the wave 3 impulse on our weekly Elliott impulse pattern, from the lows of wave 3 to the highs of wave 3 to the lows of wave 4. And look at how nice this pitchfork has been respected. The band was really nicely respected here. Once we found support, we busted up, broke above the midline, kind of bounced and tried to hold the midline. Once we lost it, came down to support. You know, you guys get the idea. But the bottom and tops of pitchforks are the strongest levels of support, followed next by the midline. You can see, where did we bounce? At 76.6, right at the bottom of our pitchfork. Now, one of the reasons I was looking to come up to 90.5 to 91K, because I'm going to turn that other pitchfork back on. Look at where this intersection is here. Here at 90.8, 90.7K, it is the back test, the bearish back test of the top of our pitchfork, of our last bull market pitchfork. That's this blue line that I have my cursor over, as well as the bearish back test of the band of the smaller pitchfork from the wave 3 impulse. So, okay, so we got those two. Let's see. Let me go into, and then this guy is the same one. This one, I believe, was pulled from the wave 1 of the bull market, right? The wave 1 of that weekly impulse. And you can see how well it's been respected. Came to the top of it, dropped to the midline, broke above it, back tested it, finally fell back into it, broke to the midline, held the midline overall, got some choppage in the band, broke above it, and then we're back with inside of it, and we hit the midline of that pitchfork. And where did we reject, guys? 88.6. This was another reason I was looking between 88 and 88.6. You can see anytime you lose a level, like look at this here. How clear could this be? This was holding as support. The band was holding as support on the daily. Yes, we were seeing wicks below it, but no candle body closes below that support band. It was a band of support. Once we lost it, bounced from the midline, it's now acting as a resistance. We could not break into it. You're going to reject. So support flipped into resistance. Simple as that. So this is another pitchfork I'm following, and you can see the pitchfork band of support, 72 to 70K, the bottom band of support, right around our value area high, right around the golden pocket. Okay, let's look now. And I want to go into this weekly cycle channel real quick, but let me first, let's see, is that the one we just covered? Yeah, okay. Not that guy. Here we go. Okay, so let's zoom out onto the weekly chart. And one of the reasons I was looking for a distribution pattern up in this area, and if you go back to my very, very first video I made on the channel back in November, the screenshot, the thumbnail of the video is this exact channel. So I've been following this channel for a long time. And you can see here, what do we know about markets? Markets are based off sentiment and psychology, right? So even though this channel was pulled from our prior bull market highs down to our bear market low in 2022, you can see that even in the past, before that price action was completed, that the channel is being respected because trends are based off psychology and sentiment. So trading psychology hasn't changed for hundreds of years. Fear and greed is the same. So that's why this channel, this cycle channel, it's based off cycles. This channel here has been working so well. And we were coming up to the top of the channel after our 5-wave impulse. At the end of a 5-wave impulse, 1, 2, 3, 4, 5, where you look for the impulse to finish at a 5th wave, and then you see a bigger ABC correction to the downside. So we were at the top of a big weekly cycle channel. We were seeing bear divs like crazy on the weekly and the daily time frame up here. And we saw clear money flow leaving the asset. A lot of signals up here. There was a lot of signals to look for a bigger correction coming, a bigger correction. And so we are dropping in that distribution pattern, but that's why I was looking for a bigger pullback from this area. And I was giving warnings. And if we go on the total chart, I was also telling people on the total chart, let me zoom into the daily chart. I was really telling people to be careful and take profits. In total 3, I was telling people to be careful because we were up here at the top of the band and we were starting to see those bear divs. Look at confirmed bear divs on the charts. And I was taking some profit up here. If we go on to the total 3 chart, we were at the top of our pitchfork. And go back and watch my videos from November. I was telling everybody I am taking profits on my alts up here. I am not waiting because I use total 3 as confluence to get into to get in and out of my larger spot altcoin trades. And we were up here at the top of the pitchfork, which was a very important pitchfork. And yeah, so I took profit up here. And ever since then, we've kind of been chopping, breaking lower and lower. And I do think it's possible we come to the bottom of this pitchfork, which is around the POC of this little range here. But I'm getting off track. Okay. Look at this too. This is what we're looking for Bitcoin to do. So this is the total market cap. Now I covered this last week in my videos last week, but if you guys didn't catch those, I want to show you this because this is something very similar to what we're looking for Bitcoin right now. We had our previous range, high time frame range, volume profile, our range that we had here, accumulation, reaccumulation range, right? We broke it to the upside, rejected from big resistance, lost our support level, and we dropped all the way to backtest the value area high of this range. Now, the value area high of this range on Bitcoin is at 70K. We have not made it down there on Bitcoin yet, but the total market cap has because altcoins are just bleeding a little bit harder. So this is very similar to what I'm looking for on Bitcoin. Distribution pattern up here, series of lower lows, lower highs, lower lows, lower highs, lower lows, all the way to our more macro support level where then you can see a decent bounce. Now, because Bitcoin hasn't made it down there yet, you can see down here, I've got this highlighted very well here. And I do think the total market cap could bleed a little bit more to the point of control where we know the most volume is. This is where the whales are really going to defend, where the big guys are really going to defend. We know that this level is in confluence with our golden pocket pull from our lows to our highs, golden pocket at the point of control. So if Bitcoin continues to drop to 70K, we know altcoins will bleed and we could see one more low here while Bitcoin comes and backtests the 70K level and does that. Very similar to what's already happened on the total market cap. That's kind of what I'm waiting for. And we got to be patient. This is going to take some time. We have to remember these are higher time frame things that we're looking at here. Okay, so that is total market cap. There was one more thing I wanted to go into real quick. I know that I'm taking a while, guys. I'm really sorry about this. It's my first live stream and I just want to cover this stuff. So let's go into this fib channel. This fib channel has literally guided me through the entire bull market. It has been so impressive, so awesome. I was having big swing trades off of this guy. So this fib channel is pulled from the bear market lows to our wave 2 lows and our wave 1 highs, right, on our Elliott impulse count. And look at this, how well this has been respected. So first of all, I was pulling this channel based off of, let's see, do I have it here? Let me just do it real quick. I was pulling this channel at the very start of the bull market. I was looking at it like a regular ascending channel, right? And anytime we were, you know, came to the top, we dropped all the way to the midline. By the way, this was at our macro golden pocket where the spot ETFs just launched and everyone said there was going to be a 10K God candle to the upside. I told everyone in the Discord that day, watch for one to the downside. And it happened because we were at a macro time frame resistance as well. So like, look at this golden pocket from the all-time high down to our 16K lows. It was our golden pocket in confluence with the top of our ascending channel. Boom. And we dropped $11,500 to the downside, but we found support at the midline. So, and then we broke above it, back tested the channel and came up higher. So here's what happened. When we break above this channel, now we can say, oh, we can put our extinctions on this channel now because this channel has been highly respected on high time frames. So now that we're breaking the channel, let's just throw the fib extinctions on that channel. And I was looking to take at 74K. I had an amazing short at 74K all the way down to the back test of the channel based off of it being the 1.618 fib extinction of this channel. And you can see just how on higher time frames, this channel's literally guided us through the entire bull market. And so I took profit up here, shorted up here, took profit on the short up here, longed up here. And then like when we were in this area, we were looking for longs as well because it was our midline of our channel, as well as that little golden pocket zone, that band between the golden pocket and the midline. And once we started up here in this range, you can see we came down, back tested the channel. Remember, this pink channel is the original channel, that original channel I just showed you, with the white line being the midline of that channel. And once we bounced, we couldn't really reclaim it. And you can see once we re-entered the channel, we dumped with volume back into the channel, telling us that this was a real move to the downside, followed with money and volume in the markets. Well, what happened? We came to our golden pocket level, our 618, bounced, back tested bearishly the channel. Now that we were back inside of it, back tested the channel, came down to the midline, made new lows at 76 cents. Another reason why we were looking at 76.6 is a major target for support to see a bigger bounce to the upside. And we did get a big bounce. Yes, it's been corrective and slow and grindy, but we got a $12,159 bounce to the upside, right? But overall, I am still looking to continue down to our bigger targets at 72 to 70K. What we can look at now, let's do our golden pocket pull here, and let's look at the 786, because the 786 is going to be in confluence with the back test of this midline here, around 79.2. And I do think there's a possibility that we could drop all the way to this level, see one more back test of the midline, and then continue higher. But yeah, this bull market channel has been great. So now that we're back with inside the channel, here's the thing: if we lose this bottom pink line, game over. Game over. We are going to see a crash like really hard. But what I'm generally looking for on higher time frames, we saw that 5-wave impulse to the upside. Let me turn this guy on. So after your 5-wave impulse ends, you generally see a correction, whether it's a simple ABC correction. So like maybe our A wave brings us all the way down to 70K. Our B wave, we come test the point of control of our previous range up in this area. And then our C wave brings us down to the point of control of this range. See a few months of a downtrend, a mini bear market, very similar to this area here. And I actually have this on the charts already. We've taught, anybody that's in the Discord knows that I've been talking about this. Just copying what happened in the last high of the bear market, putting it here and seeing that same sort of dump down and another push up. Now, I do think this dump down is going to be not one dump, but an ABC that takes a little bit longer. And then the push up will probably be higher. But I'm looking for a similar mini bear market like we saw summer 2021 or like this 6-month area here, we could see that around here while the whole tariffs get worked out, while everything gets worked out with macroeconomics and you know, the recession and all that junk. So yes. Okay, let me check the chat here. Thank you, John Cena. I appreciate the support, man. Yep, you can hear the music. Awesome, awesome. What kind of risk management do I use? 1% stop losses per trade. Sometimes I go 2%, but you calculate your plan ahead of time, right? So if you have a plan, let's just zoom in on Bitcoin. Let's go to the 15-minute chart. And if you have a plan, see guys, I wasn't ready to long yet because I just don't, I understand it's our value area low, but I want to see a little bit lower. If you have a plan to long the weekly, right? We're going to enter long at the weekly. Now, I'm going to wait for the reaction to occur, and I want to see bull divs on the chart, and I want to see money flow bottoming out here. What I'll do is I'll probably actually enter a little bit higher with my stop below whatever wick is created there. So say we wick a little bit past the weekly, reclaim the weekly really quickly, and I'd enter somewhere in this area, seeing some strength, maybe look at 1-minute market structure to see 1-minute market structure break bullishly. And I'm going to be targeting, you know, you want to have a TP in mind. So for me, a first TP would be the point of control. Second TP would be this golden pocket weekly up here. But now if I do that, it's a 14-to-1 risk reward ratio. Great risk reward ratio. That means you can use a higher position size, but you're going to be risking 1%. And your 1%, your position size is calculated based off your stop loss here. So you see how we have generally, I'm just going to make this easy. We have a 0.5% stop loss, right? A 0.5% stop loss. That means you could 2x long your entire account, Say you had $1,000 in your account. You could use 2x margin, which would give you $2,000. You could long your entire account on 2x. And if you get stopped out, you're only going to lose 1% of your entire portfolio. But if you make it to your final TP, now I would TP1 some here. I'd probably TP1 50% there, knowing that anchored VWAP from the 76.6 lows is also here. Even if you said this is your final TP, still an 8-to-1 risk reward ratio. So you're risking 1% to make 8%. You know, that is an asymmetric risk reward in your favor. So you want to be, the risk management you use is just a calculation of your position size based off of this, your stop loss. This is the most important thing. But if you arbitrary long out of the middle of nowhere, you don't know you don't have a plan. So that means you don't know what your stop loss is. Is your stop loss here? Is it here? Is it here? You know, and so you gotta develop a plan ahead of time and stick to your plan. If you get stopped out, you get stopped out. Move on to the next trade. There's always another trade to be had. If it doesn't come to your level and it bounces like it's going to right now, and I'm not going to get this long, I'm going to say, shucks, I missed it. Well, I'll look for another one. You know, it does suck because I do think there's a possibility we could pump from here, hitting into that value area low. But I mean, there's a daily right below it. There's a liquidity grab right below it. There's a weekly right below it. There's a naked daily point of control right below it, and a golden pocket right below it. Did we hit the golden pocket? Let me check that. All right. So lows. Oops, that's not the lows. No, we didn't even hit the golden pocket, guys. We front ran the golden pocket. So barely front ran the golden pocket, but you can see this is the 618 of the golden pocket. So at least on Coinbase, we did not hit the golden pocket even. And that front run of the golden pocket can be seen as a bearish thing as well, by the way, guys. Dang. Okay. But it's pumping. I mean, if you guys took this trade, what you need to be watching for now is market structure. Watch this market structure. What I would be watching for, because look at this does look sort of three-wave correctish here. A three-wave correction after rejecting from the VWAP means it's a correction. I bet you if we looked at our ABC correction targets, highs to the lows to the highs. Yeah, it broke. Okay, so this is key. We broke our 1.236. I bet we came to the 1.618. No, we haven't even come there yet. So, you know, first of all, you shouldn't be doing Elliott waves on such small time frames. It's just going to get you noise in the market. So don't even pay attention to what I just did there. I don't want to confuse you guys. Unless you're one of the best Elliotticians in the world, you shouldn't be using under 15 minutes to look at waves. because it's too much noise. And I say that with respect to all those that can do it. I love Elliott waves. So, but I'm looking for lower. It didn't hit the golden pocket, didn't hit our swing failure pattern, didn't hit our daily, didn't hit our weekly, you know, all this stuff. So what we can watch for now is just continuing higher highs and higher lows. Golden pocket, oops. Golden pocket pull from our last little high to our low. We're at our golden pocket right now. Let's see if we reject right here. If we reject here, we could probably assume, now this volume coming in is pretty nice here. But not, okay, so check this out, guys. Last push down, increased volume on the charts. Since we've been pushing up, now volume is starting to come in and we are breaking that local golden pocket, but our volume is lower overall. Look at our spikes. Red spike, red spike, red spike, red spike, red spike. I mean, overall, our trend is clearly stronger to the downside, right? So we have to wait. If you did snipe the value area low exactly, I would say great trade, hold it just in case. I would put my stop below that wick there. That's a tough one because what could happen is we could do this, just come a little bit lower. You'd get stopped out of that long. Maybe if you didn't re-enter down here, you're going to miss out on the trade. So for me personally, that's what I would do. I would put my stop below that long and I'd look to re-enter in here. But if you did long the value area low perfectly, that's not the right one. If you long the value area low perfectly, you could say, I'm going to bring this up to the point of control. I'm going to put my stop. Oops. I'm going to put my stop below the naked daily point of control up to our point of control. That's still a 3-to-1 risk reward ratio, but you say I could go all the way up here. That's a TP1. This is my final TP, 4-to-1 risk reward ratio, 4.6. That's acceptable. I would probably just do it the way I said. I'd get stopped out on this little guy and re-enter in here. But yes, okay, let's check out the chat. I think I'm so far behind. You know what? I don't know how Jason does it with 150,000 subscribers, or Frankie with his many. I don't. You know, Frankie's got a lot too. Did BTC bounce back to 81.2? Bounce back from 81? Wait. Will BTC bounce from 81.2? It's a possibility. BTC could bounce from here because it's the value area low. Took the scalp. Awesome, crypto. Serious Crypto, I know what you're doing though. I've known you for years in the chat. And I understand you're a good trader. So good on you, man. And I know that you're doing it right. So awesome job on that. You know, I would be looking at it as a scalp. Look at, we're starting to reject from the golden pocket. I would be looking at it as a scalp. And you did say that. Took the scalp. Okay, good. CME gap. Yes, we do have a new CME gap as well. We can go look at that in a second. Dang, too late. I just tuned in. I started at an hour and a half ago. So, but this is going to be recorded. You can go back and watch it. XRP red dot on the 4-hour, 24-minute looks more down. Yeah, if Bitcoin keeps dumping, the alts are going to keep dumping too. But we can look at some of these other coins, guys. I do have to leave in about 30 minutes, and I do have to check ETH and was it CRV? Yeah, CRV, I think it was. Oh, look. MEXC doesn't require KYC. It does for me. It does for me. I don't know. You might be in a region where, but they made me do it because I couldn't open trades until I got that done. Too many people looking around 74K-ish. Yes, I understand. Keezy, I agree that a lot of people are looking around 74K. And if we start to get down there, it could bust straight through it down to 72K or 70K. Trap a lot of shorts, giving us that, or a lot of longs, early long, giving us that last push down, liquidating them, and then seeing the big move from 70K or 72K. Showing little manipulation on 24 minutes. Yeah, we're just trending down, guys, and we just got to wait for our levels to be hit or wait for some sign of strength to come in here. So, if BTC bombs nukes Iran, how do you think? Oh, if there's a nuke that goes off, or if there's like a real war where America's hotly involved in it, actively involved, it's going to tank markets so hard. It's, that bear market, we are going to see a crazy bear market. DSV, what's up, buddy? What's up, man? Yes, I am loving this live, dude. Oh, you are too. Cool. Thank you. Thank you, buddy. I appreciate the support. I appreciate you being here too. Music's good. Okay, music good. Music good. Yep. All right. Thank you guys for letting me know that. Streaming takes a ton of CPU. Well, listen, I just got a really good computer that is way overbuilt for what I need it for. So my streaming lagging on you guys? It says it's excellent quality right now. And if I look at it says I'm only using 5.1% of my CPU. Now it's 4.7, 4.6. You know, I have really good GPU and CPU in this computer. I have liquid cooling, AIO liquid cooling. I've got a bunch of fans in here. I mean, this thing's decked out, man. 32 gigs of RAM, all this stuff like that. So it should be just fine. Should be just fine. I'm 20 short on ADA from last week. Yes, I can. Okay, ADA, ETH, and was it CRV? I'll go check up there. Using pitchforks, you have entered connecting the bottom of the bull run to the... Okay, wait. Using pitchforks, have you ever tried connecting the bottom of a bull run top to bottom? Most BTC macro tops have accurately predicted them using the median line. Kajus, I think... so from top to bottom, if I go onto this other chart, I think you might be thinking of, I did have that one where it was from the top to the bottom of a bull market. Let's go in here. Let me turn off some of these things here. Okay, and that prior, this guy here was from the prior bull market, from top to bottom. You can see here, top of the bull market, bottom of the bull market, or I think maybe you're thinking like from 69K all the way down to 16K. But then where's your third pivot going to go? Are you doing from like this bull market? Because I do have that one as well, I believe. Yeah, so look at this. Let me hide the other one. So this is from our 2020 bear market lows to our 69K highs down to our 16K lows. And look at where we're at right now. I mean... we're at the midline. We're trying to hold the midline. And if the midline doesn't hold, now this is high time frame, so we got to go to weekly, at least a weekly chart. If we start closing weekly candles, look at this. We're at the midline right now. We have not closed a weekly candle below the midline. If we start to close weekly candles below this pitchfork midline, there is a high probability that we do dump to back within this value area, or at least to back test it. Now, if we're going to see a bigger ABC correction after this 5-wave impulse, like I just talked about, this ABC correction here, we could see the first A wave end at 70K or 72K. We could bounce in B all the way to retest 98, 100K, and then we could drop in C all the way down to 63K or 60K, anywhere where the point of control of this range is here, around there. And God, that would scare the crap out of people. Everyone would be saying Bitcoin's going to zero, and then this would be boom, explosion, up to 180K. You know, so I'm watching this for sure. But because this is a higher time frame pitchfork based off prior cycles, we got to look at candle body closes on like weekly and above. I would even say maybe even 2 week to monthly. So you can see our midline has not given away quite yet. Quite yet. Okay, I got to go into these alts, guys. It's getting long here. Okay, Ethereum. Oh my gosh, don't... it looks messy right now, but there's a method to my madness, okay? So, let me just get rid of this guy. You can see this was our previous range. We kind of came up rejected from our previous range, value area low back test. But let's go in here. I haven't looked at Ethereum since I think Friday. So, okay, let's hide this real quick. You can see that we were in the same sort of ascending channel type structure, right? Rejected near the midline, came down, back to, tried to hold support here, couldn't, and then we lost it and we really dumped. Now I was looking for the golden pocket around the weekly. So we had this 1886 weekly is kind of similar to Bitcoin's 80.7 weekly. Well, the golden pocket's the same. Oops. Golden pocket is going to be from the lows of the daily correction to the highs of the daily correction. Our golden pocket is right at this weekly here, just like Bitcoin has it, right? So I was looking for a bounce from that area. We did not get the bounce from that. Well, we did get a decent bounce and then lost it. So Ethereum is far more bearish than Bitcoin. Bitcoin hasn't even made it down to this area of support. We're just coming into it. And guys, let me know if we start coming down, okay? I guess I should just say I'll pay attention to it. I have an alert. Okay, so as far as Ethereum goes, I'm going to delete this channel now. You can see we were in the ascending channel. We broke it to the downside. And we had our higher levels of resistance above us. But now that we're breaking down, so I'm just going to delete this golden pocket now. We didn't bounce from it. The weekly level, I'm going to delete this. You did see we did get a kind of SFP, but it was so shallow that you really didn't stop out many people. We did get a small move and then busted straight through. So this is very similar to what I'm seeing on Bitcoin right now. Bitcoin front ran the SFP, and then the next time you come down, you don't actually see a real SFP. You just continue going down. You can see we came down, back tested that level, and then made new lows. So let's get rid of that. The weekly, I'll leave the weekly on the chart because it's still possible because we busted straight through it that we could back test it and continue lower. So the weekly might act as a resistance now. But let's zoom out. Let's see here. Pi cycle top indicator. Yeah, pi cycle top indicator is great. Great indicator. But let's zoom out onto the daily chart. And you can see here on Ethereum, I've been following. By the way, up here, I was telling people based off of a pitchfork, we were hitting into a pitchfork midline. 4,100 exactly was it. And I was saying, please take profits here, guys. Please. Like, go, if you can find that in my videos, go watch that. Or it might have been in Jason's Discord. But this is also when Total 3 was topping out. Remember, Total 3 was topping out here. Same time. Look at December 4th, 5th, 6th, 7th. Go to Ethereum. December, it was, 5th here, 6th, 7th, it was right in this area here. So, but yes, we've been in this bigger daily descending channel, and I had the original channel pulled to these lows here. Oops. Here. And when we saw this giant wick on that flash crash, what was that? 2 months ago, I decided to change the bottom of the channel to that wick just because it is just a wick, but it is still, we did go that low. I mean, we did grab all that liquidity. So I moved it to there, and you can see that we kind of been trading in this channel. We saw a bounce from the bottom of the channel, but now I want to see an SFP of the lows into the bottom of the channel. So that's one level I'm looking for. But really, major support for Ethereum is this guy here. It is between, let me click the box just so I get, 1580 to like 1500. And it's actually even a little bit above right there. 1585 to like 1500. That is our major golden pocket. Let's see, what was that? Major GP SFP of the lows, these lows here. So you can see major lows to grab liquidity into a golden pocket. I believe it was, let's see here. There's a weekly channel that I got on this as well. So let me hide this daily channel. And if we just, let's zoom out onto the, zoom out onto the weekly. And I was looking at this ascending channel trend on Ethereum. And I did start saying in the Discord, the second we start breaking this thing down, we are going to dump. So you can see this ascending channel on the weekly chart. High time frame channel. The entire bull market has been in this weekly trend to the upside. Well, what happened? We grabbed the liquidity of the highs. Here we rejected from the top of the channel because the channel was pulled from this high. We rejected from the top of the channel. Bounced from the midline, made a lower high at the 786 area, tried to bounce from the midline, another lower high, came to the bottom, chopped around the bottom of the channel for weeks, held it as support overall, pushed up a little bit past our midline to grab our liquidity. It was barely a liquidity grab, but if you zoom in, it was a decent liquidity grab, and then we dumped. You can see here on the weekly chart, the bottom of the channel, we had 2 weeks that was trying to hold. And this is when I was warning everyone. I said, guys, we're at the bottom and we are seeing bear divs and weakness and money flow leave. I think Ethereum's about to break its entire trend to the downside, entire bull market trend to the downside. Well, we did break that to the downside. And we were also looking at the range, just like this range here of this volume profile. You can see our value area low broke to the downside with volume, and we haven't even came back and back tested it yet. You could look at, we could pull the range or the volume profile of the entire market. You can see that our point of control is in that major box of support. And the value area low was our lows. You can see this break above it, back test it, go higher, finally break back into it. But I don't like that volume profile pull. I mean, I like this small range here, and you can see the value area high of that range is around our more macro support level. So, and then the monthly down here, you know. So anyways, I do think that Ethereum, especially if Bitcoin keeps dropping to 72K, Ethereum's going to drop to about 1580 to 1500. Now, if we get down here, I will be looking for a swing long if I have confirmation. But you can see we had weekly bear divs on the charts, higher highs, just barely, but it was a higher high, lower highs here. You know, zoom into the daily, multiple drives, a bear div. You can see this. Higher high, lower high, money flow leaving the asset, coming into the red as we're going to do this. I mean, just, you know, even here, between this high and this high here, you know, so money flow topping out, leaving, you know, so it's just, we were seeing the warning signs in the market. If any of you guys were watching my videos back in November and December, I was constantly warning every day. Some people were getting pissed off and calling me a bear, and I was just saying, all I'm doing is following the technicals, guys. But yes, we did see that kind of push to the downside, broke the channel, and now we're just trading around locally. So what we can do here, I haven't updated Ethereum. I haven't looked at it all weekend. Actually, today is the first time I looked at the charts. It was like a couple hours before the live stream. So what we can do, I deleted that weekly. I said I was going to keep it on. But you can see that was a weekly. We busted straight through it. But we do have a new weekly now that's confirmed. We can throw that weekly on the chart at $2,000, pretty much, 2006. And let's go ahead and zoom in onto the daily chart. All right, so I had that daily marked out already at 2081, and that's our only daily, really. If we close today's candle green, it will be a daily support, but we still have 22 hours left, so I'm not marking that yet. It would be nice to come grab these lows. Let me show you guys why. If we could drop a little bit lower, if we could drop a little bit lower, grab SFP the lows, then we'd be seeing lower lows here, higher lows here. That was a horrible drawing, but you get the idea. Higher lows here, bullish div on Bitcoin, not Bitcoin, Ethereum, push up. But honestly, what I would like to see, because we are making multiple drives of bull div on the daily, between this low here and this low here, bull div. If we can come into our major support level between 1580 and 1500, a little bit lower, we would be seeing three. Let me clean this up so I can do that properly. Okay. Low, low. If we could come one more low into our major support level, high, higher low, triple drives of bull div on the daily into major support, bust. That's what I'm looking for. So, I don't trade Ethereum much, but I am going to be watching for a swing trade at 1580 to 1500. Until then, I'm really not looking at, I mean, if we SFP this, I might look at it, but honestly, I trade Bitcoin most of all, and I actually trade Solana. Bitcoin and Solana are the two I like to trade. I do trade Chainlink sometimes, but I don't like Ethereum. I don't know why. I just don't. I mean, it's not that I don't like the project. I don't like trading it, I should say. Okay, so we got our weeklies, our dailies marked out. Now this weekly here, I'm just going to hide it for now because it's not fresh. Let's zoom in here onto the 4-hour chart. And let's go ahead and look. I mean, like, look at this. We did, when you break an ascending channel, when you're rising in an ascending channel with low volume, let's just throw that ascending channel on real quick. You're in an ascending channel like this, your volume is going lower and lower and lower as the channel is forming. Clear signs of corrective price action, a bigger correction before ultimately losing it and dumping to the downside. What used to be our prior range up here was now back tested as resistance, rejected us, and we continued down. So we are just stair-stepping down in a trend, on a higher time frame bearish trend. I mean, this should not have been a surprise that it was a possible rejection area up in this area. And go watch my videos from a couple weeks ago. We did have a purple box there. I just deleted it after we were chopping around in it. But we were looking for that to drop there. Now, let's turn off the volume. And now what we can do is we can come in and we can check out our new naked weekly points of controls. Come on here. Okay, so look at this. New naked weekly point of control right on top of our weekly level. Confluence right now. We're building confluence for areas for shorts. or resistance if you're TP areas. So we mark that out. Naked weekly point of control at 2009. So right on top of a weekly level, we have a naked weekly point of control. I mean, that is fantastic. Fantastic confluence. Now we go into our dailies. I mean, this one, don't pay attention to this one because the week just started and it's still developing. So you never pay attention to the one that's on the current week until it closes, until it confirms. But you can also see we have a weekly up here. It's about to change on us, but we have a weekly at 2180-ish, 2185. Okay, dailies. We have no daily naked points of control on this entire move down. They've all been swept. And this is the only one we have here. So, yes, honestly, let's see where we're bouncing from because there's got to be a technical reason why we're bouncing. Okay, but let's talk about this. Guys, let's talk about this. We're in a bigger downtrend on the bigger downtrend, right? On the daily chart or the 2-hour chart, 4-hour chart, we're in a bigger downtrend, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. We just came in and hit the 886. Okay, in a trending market, this is based off Elliott waves, but in a trending market, when you come down and you hit the 886 retrace after a correction, even if we push up from here, we have a significantly higher probability to come take out these lows now. Significantly higher. And oftentimes you will see a bounce from the 886. But after you see that bounce, you have a much higher probability to now come take out those lows. So now that our 886 has been hit, we even wicked past it a little bit. We front ran the SFP, meaning it's more bearish that we bust through it the next time. More probable that we do not SFP, that we continue to bust through and come down here. I mean, all the signs are telling me, even if we see a little bounce from here up to our golden pocket, or you can look at what we can do is we can just take our volume profile and we can look at from the lows over here. We're starting to develop this range. Right now, we're under the value area low of that range. So until we reclaim this value area low, I mean, we could probably expect lower from there, but say we do reclaim the value area low, look at the POC, and then also our value area high. I mean, this area at 2000 now is starting to look like really nice resistance. Look at value area high, naked weekly point of control, fresh weekly level, all up there. If we are bouncing from where we're at now, we can do our fib pull from the highs to the lows. And let's turn on our 786. 786 not there, maybe golden pocket. Golden pocket's around there. Okay, so I don't like that confluence. I would prefer the 786 to be a little bit lower, but it is between our golden pocket 786 area. Yeah, I would be saying 2000's our strongest local level of resistance on the chart right now. Of course, there's resistances before that, but I do think now we have a higher probability to ultimately come take our lows at 1754 and continue down. Okay, that is Ethereum just for now. Next time I can go more in depth on some of the alts, but right now I've got to kind of get moving on this. So let me scroll in the chat real quick. Okay, guys, give me just 1 second. I'm going to turn off the mic for a second, just to get a drink real quick here. All right. Check, you guys can hear me okay? Caleb, the weekly level on Ethereum that I just talked about is $2,006 on Coinbase. Bitcoin, let's go to Bitcoin real quick. We have a fresh weekly at 86,092. And then, of course, we have that weekly below us at 80.7. Pretty much exactly. 86.9917. Okay, let me clean this up while we're shooting. Remember, this fib is not real yet. This one. Okay. CRV. And then I'll go into ADA too. John Cena. Candle Mafia, John Cena. Oops. CRV. Okay, so we were looking at this box. Obviously, we busted a little bit past this box. We busted up to the top of this channel. So unfortunately, that didn't play out. I would say that if you tried to short that, you probably would have got stopped out, lost that trade. Now, this wick here on Coinbase did not happen on any other exchange. And the second that happened, the person that was asking me in Jason's Discord about this, I did tell them it was a higher probability that all the rest of the exchanges come up to take that, to match that high as well. So we did do that. And then, of course, we were looking at, now this was from this high. This high wasn't formed yet. We were looking at this golden pocket, which was our previous highs, as a possible support because it was around the bottom of the channel. You can see that we got a small bounce from the bottom of the channel up to our bigger midline. So I'm going to delete this small channel now. You can see we were trading in this ascending channel, just like all the rest of the coins. And in the ascending channel, we're losing it to the downside. But let's zoom out and look at some of the higher time frame perspective on this coin. Because let's go to our daily chart. Same thing, guys. We're in this big descending channel. And I pulled it from our flash crash lows, the bottom. These two highs, these first two highs. At first, same thing like Ethereum. I had this channel up at these highs here. We broke it to the downside. We were backtesting it, backtesting it, backtesting it. Couldn't get back into it and drop to new lows. But once this low was made, we say, okay, well, we can extend this trend based off of that liquidity grab. You can see the only kind of consolidation we had in this big pump was right around here. So we do have some confluence for this channel being very valid. Midline, midline, midline. You know, and that's why I was also looking for rejection in this box, because when we drew this box, it was right around here in confluence with that midline, and there was a fresh daily up there. You can see that daily. Let me zoom in so you guys can see this. Fresh daily up here. We were looking for the SFP of these semi-equal highs into the daily, into our channel midline. It didn't happen. It didn't work out. So we delete the daily now. We delete the box now. We can now zoom out onto our weekly chart. Let's check out. So we have that weekly support already marked out, and now we have a new weekly resistance level here that we can mark. And look at this. This is a very bearish weekly candle. Big wick to the upside here. Smaller candle body. Almost no wick to the downside. So a little bit bearish to see that. Now, a CRV has those kind of wicks all the time because it's just lower liquidity. I don't like to trade lower liquidity coins unless I'm buying spot. And yes, I understand it's got decent liquidity, but so look at, we've built a lot of support on this way up here. Daily, here. Daily. Oops. Here. And another daily. Here. Which one are we going to use? Which one are we going to look at? Well, let's look at other confluence here. So we can do our fib pull from the lows to the highs. Okay, you can see our golden pocket right below us that we haven't hit yet. We have a daily right at the 0.65. I'd be paying attention to 43.9. Let's go ahead and do our volume profile pull from right after the flash crash. Remember, this flash crash was part of the impulse down, so I'm not going to include that wick. I understand a lot of people will include that wick, which probably is not going to change it too much. Let's see here. Value area low is a little bit below that. Let's not include the impulse. Let's go after the impulse. Same thing. So it doesn't matter. But you can see here now, if we're looking at this volume profile, golden pocket into a daily around the value area low. I would say this area could be a box of support we can look at. Point of control, channel midline, weekly, box of resistance above us. Okay, there. I like to make my resistances purple. And then we can also look at, let's zoom in here for our chart. Let's look at this larger trend. This could be an ABC correction after this impulse finished down here. We could see, well, first of all, you know, we saw the ABC there. A wave, B flat. So B flat, you take out the highs of A, and then now you're going to come down and take out the lows. I mean, overall, that's what we could be seeing. I don't want to say that yet because it's too early right now to tell. Also, we have supports before that where we can look for bounces, even if they're going to be lower high bounces where it's like a day trade or a scalp trade. So what I would be looking at now, let's go ahead and look at our new naked weekly points of control. Okay, look at this, guys. Building confluence, new naked weekly point of control, right in the golden pocket, right on top of that daily. I mean, really building some nice stuff here. Naked weekly point of control. What I would do now with this box, yes, the value area low is a little bit below it, but you're going to have to pull it to there, and it sucks because we have liquidity right below that even. So this is going to be kind of a tough one because what do you say? Do I long the naked weekly? Do I long the daily? Do I long the 0.65 of the golden pocket? Do I wait for the value area low? You know, it's going to be tougher. But, and then look at naked weekly point of control right on top of our weekly level. More confluence. I mean, that for sure is going to be our resistance that we need to be watching. Okay, now let's just zoom in and look at our naked dailies. There's going to be probably a lot of them in this area. Actually, no, not really a lot. I mean, we have one down here, which is going to be around our 786, but, and nothing in here. Okay, so this one here, let's check this golden pocket. Let's turn on our 786 as well. Yeah, so right around our 786, like I was suggesting. So I would say 786 into a naked daily point of control could be a small support area. It's not the best. I mean, it's in between some daily levels, but you could say that is a support area there. 40 cents to like, 40 cents to like 40.3 or 40.28. So that's a nice little box there. But yeah, we have a weekly. I mean, we have a daily above and a daily below as well. Not the nicest there. See, and here's the thing, guys. You don't have to trade. Like, if you're buying spot, I completely understand and like looking for levels to buy spot. But why would you trade a asset that has less confluence on a trade if you could look at assets that have more confluence and better trades and trading plans? You know, stick to ones that have the most confluence. So if this only has this, but Ethereum has 5 or 6 or Bitcoin has 5 or 6, you know, I understand the returns are going to be better here because your percentage moves are going to be better. But, you know, the point of being a day trader is to scrape a little bit of money from the markets daily. You know, protect your portfolio and scrape a little bit from them. It's not a get rich quick scheme. So those that are really trying to get the big trade every time and using too much leverage, overall long term, it's not going to work out for them. That's all I would say. But yes, okay, so support between a 40, what is this? 44.12 and 43.25. I would say that's a support level. I'm now just going to delete this. We'll do this. Come in here. This is going to be a GP, a date. Wait, was that a daily? Yeah. Daily. Naked POC. And then the value area low. Okay, that's in that box there. This guy is just a 7.8. Oops. 7.86 into a naked daily point of control. Okay, so those are the support levels. Now your resistance above here, you know, you got your channel midline. What else? A weekly. And then a naked weekly POC. What else was in there? Yeah, naked weekly POC weekly. Okay, so those guys there. So that's what I'd be looking at here. And then of course you could just play this smaller range, but like check this out. As far as market structure goes, let's just throw a line on the charts here. You can see this line. I'm just gonna make it our SR flip level. So support, 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 lose it, resistance, resistance, and yeah, we whipped way past it to our midline, but resistance. So now this area here is kind of going to be a support resistance flip area that we need to break above and start backtesting to get up there. So there's a possibility that if we do pump, we can watch for that. Or, you know, if we do this and start to lose it again, if we start to lose it again, then, you know, we could drop. But overall, lower low, lower high, lower low, lower high, lower low. Could we expect the trend to continue? Remember, the trend is your friend until the end. So just zoom out and take into perspective what is happening. When was this? Since Thursday. You know, we've been in a downtrend. Now we are... wait, was that... I'm forgetting where our golden pocket was now. Okay, yeah, golden pocket's in here. So did I mark that? Yeah, I did. Okay, so yeah, I would look for a little bit lower, to be honest. I would be looking for a little bit lower. But yes, that's pretty much it right now for CRV. Guys, just give me a second. I got to let the dog in. It's scraping at the door. Okay, sorry about that, guys. So yeah, I would just be watching the resistance above, supports below. I personally wouldn't be looking at too much in between then. Like, if you really wanted to, you could come in here, you could pull your volume profile of this little guy here. Oops. Like this little range here, and you could trade this volume profile. But you can see now that we're losing the value area low, we're kind of having trouble getting back within the volume profile. There's probably a higher probability we're going to continue down. But we are seeing some nice bull divs forming here. You know, lower lows, higher lows. I mean, yeah, higher lows. You get the idea. But we're you know, kind of not there yet. I would even say the 618, you know, you want to watch for support. So if we continue to do this slow, arduous grind down to here, we could be forming some really nice bull divs. Boom, you know. Okay, let's go into ADA. Oh, we're almost to support on ADA. All right, so we were looking at this golden pocket. You can see that we did get a bounce from the golden pocket, but it was kind of a scalp. We didn't get much from it, so it would have gave you a scalp trade. But this one was tough too, because you can see our volume profile. It kind of tricked you out, like, oh, okay, are we re-entering back within the value area? Nope, trick you, boom. And then we had this little guy here, but I did say I don't really like this guy. We marked it out because it was a 786 into a daily, but it was, you know, it wasn't much there. So that didn't really play out either. But the big support that we had down here, I mean, this guy is still coming here. And we have the SFP into the, let's pull this a little bit, ABC target. It is a daily, a value area low. Now that value area low is of a much bigger range. And then we have naked daily point of control and an 886 touch down here. But that 886 touch, I believe, is from this low up to the high. 886 is in this area. So we are coming into support. Let's clean this chart up. Now you can see here, we were in this volume profile. Now, this was from March 9th. This was that March 9th range. And if you guys go back and watch my channel, I was saying that ADA was looking a little bit weaker than Bitcoin and some of the other coins. The other coins were making this ascending channel type of structure. And this guy was just making a flat channel, like a flat range. So, just not as strong. We're breaking the volume profile to the downside. And what sucks is we kind of front ran our big area here. 382 POC SFP, you know. So let's zoom out on this and let's get a larger perspective look real quick. Because this was nice impulse to the upside, and this does look like a three-wave correction overall. And then, I mean, you know, it's tough because 1, 2, a big C wave in your blow off top there. Take your liquidity from these highs, and then you just dumped. But we front ran our real key level we wanted to see up there. Okay, let's look at this. So same thing, guys. Descending channel. Like many of these coins are in descending channels. This guy down here is really where I think we could come to value. Once again, same kind of macro support. We had accumulation in the bear market. Accumulation range here, right? Accumulation expansion. Now, correcting, because this descending wave overall does look, as far as larger time frames, a correction on this expansion up. So now, can we correct all the way down to our golden pocket, where you can see our previous macro range value area high is around 50 cents, and then see the big explosion continue. I do think that's a possibility here. So let's just do, let me get rid of some of this smaller stuff real quick. We'll pull our volume profile just from there. The descending channel, the volume within the descending channel. Yeah, value area low is right pretty much where we're at right now. So I would be expecting some sort of bounce from this box that we have here. Too much confluence down here not to. Value area low, naked weekly point of control. 2 SFPs. So you can see we have this SFP and this SFP. So I'd like to take them both together. And yeah, the value area low we're touching right now. But this guy, and then you can see towards the bottom of the bottom of the box, we have a naked daily point of control on top of a daily. Naked daily. I know you guys probably can't read that, but I know what that says. So yes, and let's do that fib pull from high to low. 886 is in there. We're actually hitting the 886 now. So 886 hitting, because we are in a larger downtrend. Higher low, or lower low, lower high, lower low, lower high, lower low. Now, first sign of maybe a higher high here. So are we going to make a higher low and continue? It could. Let's just say that it could. It could be bottoming out. I think that if Bitcoin keeps dumping this guy down here, but ADA is bullish. We do know it's going to be part of the reserves, and this is where you take real world fundamentals into play. You know, we know it's going to be part of the reserves and everything. So maybe we're going to start to see a bit of accumulation in this area here. Yeah, of course, that was when they announced that ADA was going to be part of the reserves. And so we got this giant imbalance. Look at that wick, that daily candle there. Giant imbalance in the market. So, of course, we're going to come back and correct that imbalance. Fill all the imbalances in here. You know, take out the fair value gaps. And then we could see a move up. So now that we have corrected the imbalances that were in this candle, we could see that push to the upside from the box of support that we're pretty much at right now. So what can we look at? We have a fresh naked daily point of control at our regular rate, our higher time frame range point of control at our channel midline, 73 cents. This area here would be an area where I'd be interested in looking for a take profit from this area, maybe a short. Let's clean this up. This daily has been hit. We'll get rid of that. We do have a daily a little bit just above that. This daily order block here, I guess you could call that an order block, but I'd be refining it a little bit. I'd probably zoom in on lower time frames and look at an order block within that daily order block. But there's a daily here, 73.80. And I would still say this is still important resistance because we have our range. We can look at this as a range that's kind of forming here. So we can look to now come take out the lows of the range, come take out the highs of the range, and then maybe just continue the range for a bit while Bitcoin does its thing. I mean, that's just a possibility. Oftentimes market makers like to stop out liquidity on both sides. Now, I know this is a bigger day range, so that will take time to play out. But yes, I would be looking at the point of control in confluence with our naked daily point of control. Let's just make sure that's still a fresh naked daily point of control. No, actually it's not. Okay, I am sorry. I need to update these charts better. Let's check out, because I don't trade ADA much, so that's why, but that's no excuse. I'm sorry. But we do have a fresh weekly there now. Even better. Even better. Higher time frame, the better. So fresh, naked weekly point of control. 73.68 or around there. Let me actually get that on target. $73.67. So it only moved, what, 1/10 of 1%. And then we're not paying attention to this one because that's the week that's ongoing right now. Yeah. Okay. So that's our only naked weekly point of control. And let's double check our, why do I keep doing that? Yeah, we still do have that naked daily down here. We have one that's up here. You know, that might be a spot. Let's zoom in onto the 2-hour chart. Where you at? There you go. That guy was from yesterday. You can see this new daily one here. This is from yesterday. So we do have a naked daily point of control around 67 cents. Unless you're scalping this, I mean, it's kind of risky to try to short from there. I mean, that could be a TP on a scalp. If you're scalping the value area low where we're at now, if we're going to see a small bounce from where we're at now, hitting the value area low, we could come up here, hit this, and then continue down to the box. So I would say that's a valid idea if your risk management's on point. And if you're scalping, just make sure you are using proper risk management and you understand it's a scalp trade, and to take, like, I would take 75% profits. But let's also look at our fib pull here. Golden pocket. Okay, golden pocket's a little bit above that. I don't like how it's a little bit above that. And our 0.5 is a little bit below it. I don't like that too much. Yeah, it's tough because you can see it is kind of a support resistance flip area. Resistance, resistance, support. Kind of support in here. Now it might be flipped to resistance. But the golden pocket a little bit higher would probably work a little bit better than that. Honestly, I wouldn't, even though there's a naked daily here, I probably wouldn't be looking at any sort of trade that you could take off of it. But yeah, trend is your friend. Actually, this looks like a very clear 1, 2, 3, 4, 5. Now, if that 5 could come a little bit lower, we would finish a clear 5-wave impulse to the upside. Even if we're going to see a correction, we expect a 3-wave correction to the golden pocket area. But if we impulse out of this, you know, so I'm telling you guys, it is near or at, I mean, our wave 5 could be in. Let's actually look here. Let's do our fib pull from the lows of wave 4 to the highs of wave 4. Let's turn on our expansions, 5th wave targets. We are in the target box, but the 1.618 is what I'd be really watching. That's the better target. So it's in our box. We have hit the 1.236, which is part of the targets for the 5th wave. But yeah, 84 cents, 84.1-ish. 64.1-ish. I'm sorry. I can't read. But yeah, so this does look pretty. Let's turn on our volume, because what you want to see in a 5-wave impulse, you do want to see your wave 3 have the most volume in it. And okay, so if we're looking at this 1, 2, and look at in your 2, clear 3-wave correction in 2, so that plays out. If we zoomed in, we could probably see a 5-wave impulse within this, because you're looking for a sub 5 count within your wave 1. Then you're looking for a 5 count within your wave 3, and then you're looking for a 5 count within your wave 5. But you would have to zoom in really low time frame, and I'm not going to do that. But we could, I mean, this does look pretty valid here. Let's go ahead and look at our trend-based Fibonacci extinction from the highs of 1 to the lows of 1 to the highs of 2. Oop. Yeah, look at this. Your 1.618 is your wave 3 target. Where do we bounce from? Pretty much the 1.618. So giving more confidence that this is a 5-wave impulse to the downside, that we could be, wave 5 could be in from where we're at now, but I don't think it is. I mean, this liquidity here is begging to be taken. Begging to be taken. This liquidity here from our giant imbalance candle, begging to be taken. You know, if we came just a little bit lower in this wave 5, and because this is the 2-hour time frame, we could slowly grind down till tomorrow morning New York Open, be at support at New York Open tomorrow morning, and Bitcoin's at 80.7, and boom. So I think this is a good looking trade. Let's do this. Let's no, wrong one. I would wait for the reclaim. If we SFP, I would wait for the reclaim of the level, maybe even the reclaim of the value area low. Because if this is going to be even a 3-wave correction out of this, we can look for the 3-wave correction to in between the golden pocket and 786. So let's just say that we go down to that 64.1, right? Where that 1.618 was. Then let's go turn on our 0.618 to 786. And you can see we have other confluence up here, right? So makes sense that we come a little bit lower, A, B, C, up into our box, our general area of resistance where we see a lot of confluence. Now, if we make a 3-wave move up there, I'll be taking 100% profit out of that long here. If we make a 5-wave impulse and reject and we see volume come in on this wave here, you're going to look for a shallow wave 4, probably to back test this midline and a push up one more time. So we'll have, we don't have that data yet, but we'll have to analyze how it bounces once we get down there. But yeah, the ADA is actually really nice. I mean, this looks good. So, John Cena, I know you said you were in a short 20x. I would be looking to take some profit in this area. Maybe even now that we've hit the value area low, I would be looking to take profit on this. I would probably take a majority of it, to be honest with you. I mean, I don't know what kind of, if you're looking at that as more of a swing trade. Let me, oh gosh, I'm sorry, you guys. I haven't been paying attention to the chat. I'm such a bad streamer. Okay, let me. Okay, streaming takes a ton. Yeah. Okay, short. I'm short on ADA from last week. Well, that's a good short then, man. Good job, because we were much higher last week. Price for the highs. Do you think the move will happen in or New York Times? Yeah, I think honestly we're probably gonna come down, see a move during New York. We might chop overnight. I took the long from it. Nice. Okay. Yep. Okay. Got the trade to the dollar. Nice, Matthias. Nice. So happy to catch you live. Toxic, thank you, man. I appreciate you joining. I do. Getting ready to scalp a trigger wave into that SFP. Yes, yeah. I want to see the SFP too. Liked, hope to see you at. Thank you, DSV. I do plan to do more, and I hope this stream is going well. Will you guys please let me know if the stream is going okay? You're a killer, bro. Don't say. Okay. Thank you, Darren. Okay. Yes, Zeros, I get you. I could do this all night. Well, I could probably, but I have to drink. I've already drank a lot of water, so. Let's see here. Soaking up the knowledge. Awesome, Caleb. I'm glad. What is that weekly level? Too small? Okay, I got that for you. I understand 1 to 2% risk. Yes, 1 to 2% risk. Great video, man. I could listen all night. Love your spirit. Thank you. Dr. Rex, thank you, bro. I really appreciate that. You know, it's comments like these that really fuel me too. So I love it. I love to see it. And yes, I am going to make a tutorial video on pitchforks and fib channels and that stuff. I'm waiting. There's some developments happening with the channel, and maybe, I don't know, you know, those of you that were in the Jason Casper know that I was maybe going to join as a coach, maybe not, you know. So I'm kind of waiting because I have to, those are going to be like more premium content, and I don't know what I'm going to do yet. So I'm sorry. It's taking so long, but yeah, no lag. Okay, great. No lags. Okay, good. Stream is quiet. Quality is great. Awesome. And I'm streaming in 1080p, but I can actually stream in like 2K or 4K. The thing is, it's not optimized for YouTube, and YouTube suggested that I don't do it, even though my computer can handle it. So we'll see. I might play around with that a bit in the future. Loving this. Good time, 2 p.m. Monday. Oh, 2 p.m. Monday. Wow. Okay. Wow, Trader and Z. That's awesome. Right now it's 7:20 p.m. my time. I'm on West Coast. Okay, I agree with Bull Diz, but like the tariffs, it's just going to drain us. Yes, tariffs are going to be a big wild card, man. It's going to be a big, big wild card, and we know what does the market hate most of all? The market hates uncertainty, and what these tariffs are bringing is uncertainty in markets. And when we see inflation rising 3 out of the last 4 months, we see uncertainty in markets over the tariffs. We see, and the tariffs could cause lack of trade, which is going to also cause inflation to kind of come back up, all these different things. So the markets are really not happy right now. And this is why we were at the zone up here, on Bitcoin. We were at that zone where we could see the big, a big top. And I would just say we're in the process of a distribution. Distributions take time to play out. So I would say, we could probably expect, with uncertainty in the markets, after seeing distribution at the top of higher time frame pitchforks, higher time frame fib levels, higher time frame, all these different things, we could expect the trend to continue bearishly overall, seeing nice bounces along the way, until some certainty gets worked out, some clarity in the markets gets worked out. We also know that this was a crypto-friendly administration, and I mean, they haven't really been that crypto-friendly. They haven't been mean, but they haven't been friendly either, or they haven't been positive. So I would say markets hate uncertainty, and we are in very uncertain times. We just have to watch. We have to take that real world consideration into account, what's happening in the real world. So I know, right? AAD, Dad, I am not impressed with ETH's performance either. Man, like, what the heck? I bought ETH back in 2020 at $1,500, and we're almost back there, dude. Like, gosh darn. Like, Bitcoin's way up from it. It's crazy. Okay, BTC rolling over blood time. Okay, let's check BTC here. By the way, guys, that's why I said I wasn't entering yet. I wasn't entering because now look at the way this is grinding down, though. Almost in like a 6-minute little bull flag thing. But overall, our trend, even locally, is still bearish. Lower lows, lower highs, lower lows, lower highs. I think this SFP into the daily or even the weekly is the area to be really looking for a long to come in. Now, if this happens before New York Open tomorrow morning, there is a possibility we do something like this. Come down, SFP into the daily, see a break in structure, or like maybe even start to come up to these highs up here. And then we roll over one more time tomorrow, grab that, come in one more time, and then see the bigger trend change happen. Because we're looking at, remember, this area now, because this was a micro range that we lost. Now we are back testing it as resistance and making new lows. So what we can be looking for, let me now zoom back out. What we now can be looking for is this range here. And remember, assets range far more than they trend. So learn how to trade ranges. All I would say, learn how to trade ranges. Okay, I'm here now. So, Jafiel, what's up, buddy? It's good to see you, man. It's good to see you. How was your dinner? I hope it was good. And thank you for joining. Thank you so much for joining. I think we've been live, God, 2.5 hours already. Okay, 2.5 hours. But I've been enjoying it, and I think the stream is going pretty well. I haven't even checked to see how many people are watching. Jeez, I'm such a bad live streamer. Right now it says I have 86 viewers, and 487 views. So it looks like a lot of people left. Maybe when I started doing altcoins, but for me, I'm happy with that. I'm happy just with everything. So, and it looks like Adam Wubre, thank you for subscribing, man. I appreciate it. Thank you. I hope this channel gets to help you in some way. I try to post consistently here. Okay, thanks looking for CRV. Thanks for looking at CRV. Yeah, no problem, Han. No problem. Check out Super. Yeah, we'll check out Super real quick. Okay, guys, I'm going to check out Super, and then I got to get going after that. I still haven't eaten yet, and we've been live for 2.5 hours. So I'll check out Super, and then after Super, we'll take one last real quick look at Bitcoin, and then we'll get going. Super. Okay. Daily. Let me get rid of my chicken scratch here. I know this chart looks really messy right now, guys, but I promise there was a method to all the madness. Like, look at, we did reject from that box really nicely. Okay, let me just delete the old TA. Looks like overall we still are trading in this bigger descending channel to the downside. So tried to break above it. Now we're entering back within the big descending channel. And this descending channel goes back all the way to December in a strong downtrend here. Jaffiel, I think I was you the other day that asked me about it. And I said to watch out for a fake out of this channel into the POC and then coming back within the channel. It looks like we did exactly that. Because remember, we had that naked daily point of control. We had a daily there. We had our pitchfork upper band of resistance into our big range point of control, and then of course the naked daily point of control was not hit, but it, you know, was in that area as well. So now what we can look at, let's just get in here and clean this up. I'm going to delete this now. It's been hit. We're going to delete this. That's been hit. Or has that? Wait, hold on here. Yes, that was this daily. Okay, but we do have a new daily there now. So we'll zoom out onto the weekly chart here. Okay, our weekly support is still weekly support and no new weekly resistances except, I mean, we already have it marked out there. Dailies. Okay, so all I'm going to be marking is this daily doji because technically this is a daily here at 59,345. Oh, that doesn't look good though. So here's the thing, Jaffiel. Bounce from value area low. Come up to point of control. Strong rejection from point of control so far. So, you know, it's just not the best thing to see here. Okay. And I promise I'm going to clean some of this up, guys. I know this is hard to follow right now. My chart looks disgusting. Daily, we do have that daily. What is this? Oh, okay. I marked it to this guy, not this guy. So see, it's such low liquidity. You even have these little things here. And then, yeah, naked weekly point of control at the bottom. Hold on here. I can't even tell what's going on with my chart. Let me clean some of this up. I'm going to hide this channel for now. And let's go ahead and hide the weekly up here. We're not close to it. Let's hide the naked daily. We're not close to it. We do have that new daily, so I'll keep that there. And this new weekly here is still important. And these guys down here are still important. Okay, so our support below us. You can see we have this light blue line, lighter blue line here is the bottom of our pitchfork. So you can see the bottom of our pitchfork where we bounced last time. And we came up to our pitchfork band. We rejected from the top of our pitchfork band, our lower band, which you can see in that flash crash, it held as support, held as support, held as support, and then now it's flipping to resistance. So overall, the trend is still strong to the downside, and we couldn't even break, I mean, we did break local market structure, but this could have been, once again, a three-wave move, right? What do we look for? Impulsive versus corrective price action. 1, 2, 3. Three-wave move, and now do we just continue to roll over and come back down? So be careful of that because that did look like here, we did see the impulse in here for a C. Within an A, B, C, you see a 5, 3, 5. 5, a smaller sub-count 5-wave impulse within wave A, 3-wave correction within B, and then a 5-wave impulse within wave C. It looks like we did see something very similar to that. I'm sure if we zoomed in, we could get a good count of that. But this now, daily level here, into the bottom of the pitchfork, we have a naked weekly point of control there. That is looking like a really good support level between 41.5 and 46.5. Now that weekly above there is probably going to be close to the golden pocket. Let's do that. No. It's not. So that weekly, it sucks because it's in between our zone of the golden pocket 786, but I don't like how there's nothing there, nothing else there as far as that goes. let's take a look. Let's zoom in onto the 4-hourly chart. Okay, well, you can see here was our pitchfork midline in red. Lost it and kind of trending down, but I would say as far as volume profile, local volume profile pulls, we could do this here. You can see our point of control is in that box of support, so that adds some confluence, but you could also pull it to right after this guy here goes, and still, same thing. So this box of support that we already had confluence at, there's just a lot more confluence down here. So I would say that guy down there would be the only support, not the only one, the more important one that I'd be looking at. And then, I mean, okay, let's check out our naked weekly point of controls that are local. Okay, so we have one that just closed a few hours ago, just above us. We're not paying attention to this one, remember. And look at the naked weekly point of control. We already had that marked out there, but it's still there. So, I mean, I say the box we already marked out is the box to be looking at. And this guy here, we do need to mark him out because if we do see a bounce, it might be enough time where it's going to be in confluence with the bottom of our pitchfork band again. Okay, so there's naked weeklies. Let's go to our naked dailies. Let's see if there's one. Yep, okay. Couple right down next to our weekly. So I would be watching this guy here. And what I would then do, because this guy here, you have liquidity right below it. So it's highly unlikely that you're going to bounce from this naked daily point of control without taking out that liquidity. I would be then at that point just looking to come down here. So I'm not going to pay too much attention to this naked daily. Yes, it is one. And yes, we could see a small bounce from there. But primarily with the liquidity right below it, I'm not going to be looking there. You can also see we have a naked daily right on top of our naked weekly within this box. This box probably does need to be extended a little bit down. Okay, so that is that. And what I would do now is mark out this guy as a support. Now, just know that this is not the best support. This guy down here is much better. And then, of course, this guy down here is pretty good too. But that is a support level where we could see a bounce. And then to the upside, you can see our pitchfork band has two levels of confluence. At the bottom of the pitchfork band, we have a naked weekly point of control. At the bottom of the pitchfork band. And then at the top of the band, we have a fresh daily level. And I'm not even going to put a box there, but just that's the area. Okay, 59,345. Yeah, so this is tough because you can see this was our ABC correction to the downside, into the low. Now, what have we been looking at on Bitcoin, on all the other coins? We looked at this three-wave Trump push up, followed by the three-wave correction down. So I would say you could pull that same volume profile, value area highs in this box, point of control value area lows in this box, the two primary boxes we've been watching. There is confluence, you know, and we do have some volume gaps in here on our volume profile, which you expect to flush through them anyway. So yeah, Jaffiel, I would just be, it's tough. I would be looking at just these boxes here, like this guy, primarily this guy. We could zoom out and get a more macro look at things too, because I just don't think we're going to leave this liquidity. Look how close we got to taking this liquidity on this low here. I mean, the market makers are not going to push this thing all the way down just to leave that there. Yeah, we're going to see a bounce because everyone's now going to long it. They're thinking, everyone's longing up here, thinking, oh gosh, it front ran it, we're going to rock it, and now we're going to dump and take it. So in terms of market psychology goes, you know, Oh, we're coming down here to take the lows. Oh, no, we didn't take the lows. Oh, now we're changing market structure. I'm going to long up here. And then they just bring it right back down. Wreck everybody. Take those lows and then see the move up. But overall, we can just be looking at that volume profile, that bigger volume profile. Range. And this could be a reaccumulation. So look at this. As far as higher time frame goes, we've got a very clear accumulation range in the bear market. Accumulation, accumulation, accumulation. Expansion, right? Huge expansion. Now, we could be seeing, after the expansion, we could be seeing a distribution pattern in the making. If it's a Model 2, we'll make a lower high at the golden pocket, 786 area, and dump. If it's a Model 1, we break above, take out the highs here, come up here. We can then adjust our pitchfork to a different pitchfork to look for those highs. But I would say, it depends. I did hear Super Gaming is supposed to kick off in April. Now, I have no idea, I have no idea. But if there's a small possibility this could be reaccumulation. You have accumulation, expansion, maybe reaccumulation, maybe another expansion. It's too hard to tell right now. I mean, I guess got to be honest with you. I don't know. But let's actually check out. Let's zoom out onto the weekly and let's look at Market Cipher. That could give us a hint. Bear divs on the weekly. Money flow coming out, Now, because we front ran that low, we're not making bear divs on the bull divs on the weekly. If we would have taken out that low, or if we still do come down to take out that low, confirming bull divs on the weekly, that would be a very nice signal. Zero line acting as support for the money flow to cross back up again. I want to take out that low down there, personally. If you want to see a bigger move to the upside, you want to take out that low. Let's go on to our 2-day chart. Okay, yeah, we do see some bull divs here. But once again, front running key lows. Money flow coming out pretty aggressively. Bad sign on the charts. Money flow always overpowers bull divs. If money flow is really bearish, then it will overpower bull divs. What then happens is you actually need to see multiple drives of bull divs. 1, 2, 3 lows. This will do this. Roll over one more time. 1, 2, 3. And by then this goes like this and starts curving up. That is the signal you need. So I would like to see one more drive of bull div on the 2-day chart. Taking out our lows. Grabbing that liquidity. Making a move up. We could even come down to this golden pocket here. Okay, so that is what I'd be looking at. As far as local, you saw the box here, the 2 boxes down here. This guy is a kind of box, but I don't like him too much, and then higher time frame stuff. If we do start to break above this pitchfork band, then we can look for a move up here to the midline. You can see we have an SFP of these highs up here into the midline. We have a naked weekly point of control and our pitchfork midline up there. It's also going to be probably, let's do this, from the highs to the lows. Now, I need to check something out. Look at, that is not where the 68% retracement should be. It should be around here. Now, why is that changed? Because let's go into our measurement tool. That is over a 100% move, or about 100% move, 80% move. So what we need to do, because we need to change this to fibs based off log scale, it'll give us our correct 68%. Yeah, much better. So golden pocket there, but let's go ahead and turn on our 382 because the 382 often acts as support resistance in a strong trend. Okay, I don't like that. Yeah. I would say this box is an important box of resistance though. SFP into the pitchfork midline, into a naked weekly point of control. Okay, let's check Bitcoin one last time, and let me check the chat. Preparing for war, man. What is up? How are you doing? Thank you for joining. And R Pink, hey, dude. Hey, yeah, R Pink, I'm going to try to start going live more. Chanel, thank you for joining. Awesome. Thank you for joining. What's a safe leverage multiple? So your leverage should depend on your stop loss and your position size. Leverage is a tool used to as margin. So you don't have to put, like, say you have $1,000 account, right? Let's just go in here. Say we have $1,000 account. You're risking 1% per trade. And you want to enter Bitcoin at 80,700. But your stop loss, say you're going to try to snipe the crap out of this thing. Your stop loss, now this is not the proper stop loss, okay? I'm doing this for an example's sake. Say you want your stop loss to be 80,650, right? Okay, now we can calculate our position size. We can use a $16,000 position size and get stopped out and only lose 1% of our portfolio. But we don't have $16,000 in our account. We only have $1,000 in our account. Well, that means you could turn your leverage up to 17x leverage, and then you just divide this by 17. That would give you your proper position size to enter. And that is how you use leverage to enter a trade that has a very tight stop loss where you don't have $17,000 in your account or $16,135 in your account. So you use leverage in that scenario and then say, okay, but I don't even want to have all my money tied up in one account. Well, then use 50x leverage and you'll have, you'll have $50,000 instead of 1,000. Then you can put 16,000 of that 50,000 in the trade and you'll have extra money left over to enter other trades, shorts, the schlong method, all those different things. So leverage, you should not be calculating, leverage multiple should depend on your stop loss. It should depend on your position size, all that stuff. Absolutely, absolutely. If you're a beginner with this, do not use, okay, you should be using, if you do come up with a good trade, say you're learning, you're coming up with a good trade, okay, I'm going to take this long from the weekly here. I'm going to enter right here. I'm going to snipe this baby and I'm going to put my low below the naked daily point of control. I have a 0.57% stop loss, right? So in this case, say we have $1,000 account. We're risking 1%. We're entering right at 80,700, right on top of that weekly. And our stop loss is going to be 80,268. I'll say 268. Okay. So 80,268. Okay. Now we're going to calculate our position size. So you can use a $1,863, right? You can use that. You can put that much position size on your trade. And if you get stopped out, you're only going to lose 1%. But we only have $1,000. We don't have $1,800. Okay, well, I want to keep some money in my account just in case I want to short and stay long at the same time. I want to do the schlong method, the Jason Casper schlong method, right? So I'm going to use 3x leverage. 3x leverage will give me $3,000 in my account. About half of it, a little over half of it, is going to be tied up in my long trade. That'll give me a little bit left over to also stay in the long from down here. But if we do work our way up here and it looks like it's going to roll over, now I can short from up here, stop loss above the local high, short from here, and I'm in the schlong now. This one's already going to be in massive profit. You should be TPing 50% of the trade here. Now you have this stop loss moved up to break even, risk-free trade, leave it open just in case it decides to pump. You're in the short, you're hedging against your long, you're protected both ways. Now, if this short comes down, your short's going to be in massive profit, your long's going to get stopped at break even, but you have enough money in your account to do both of these trades with nice stop losses because you use 3x leverage. So that is the way you use leverage. You do not say, okay, I have $1,000 in my account, but I want to make $2,000 from this trade. I'm just going to crank the leverage up to 30x so I have a $30,000 account. So when I hit this TP, it's going to give me 2K profit. That is the absolute wrong way to do it. And if you might win a few trades like that, but you are playing with fire, and if you want to be a long-term trader, you need to learn not to do that, because all it takes is one mistake to ruin months and years of progress. And trust me, I had to learn this the hard way. I had to learn this extremely the hard way over and over and over before I got it through my head. So, and you know what? I still make mistakes with it because I'm human, and dopamine gets kicked involved, and all these different emotions and stuff like that. So I would say learn proper risk management. It is the number one thing to learn. The number one thing. Absolutely. And I'm going to go more into this in my streams. I'm actually thinking about doing a live trading challenge where we take $1,000 account. We just throw $1,000 into account and we use 1 to 2% risk at the most 1 to 2% risk per trade, and we trade this. And here's the thing with trading. I've talked about this in Jason's Discord streams. But at first, it's like an exponential growth curve, right? At first, your progress is going to be so slow, and you're going to be making $5, $10, $12, negative $3, $5 here. And you're going to say, I'm doing so much work. I'm doing so much good price action. I'm spending hours on the charts to make $12 when I could go work at McDonald's for an hour and do that. But it's not about how much money you're making. It's about learning the process, because it scales up. And as this account grows to $5,000, $10,000, $20,000, now you're getting into the exponential part of your portfolio growth, where when you make that 1 to 2% trade a day, you're making $1,000 a day, $2,000 a day, $5,000 a day, $10,000 a day. And then over time, using proper risk management, you build your account up to, I'm living on a yacht, baby. It takes time. It's not a get rich quick scheme. It is absolutely slow, arduous, and in this area, you're going to feel like you're doing a whole lot of work for a whole lot of nothing, and it's going to suck, and it's going to wash out a lot of people that aren't committed. But if you can stay focused, stay disciplined, you will get there. I mean, just, it's tough, guys. It's tough. If trading was easy, everyone would be doing it. It's not easy. But if you're committed to it and you learn discipline, you know what I notice about traders? A lot of traders are into fitness and into the gym and stuff like that, because a lot of people that are into the gym, they're into discipline. Hey, I go to the gym 5 days a week. It's a chore to me. It's like eating to me, or sleeping. I do it, and I learned that people that have discipline in other aspects of life tend to have more discipline in trading as well. So I'm sorry for my rant over, but it's important. Okay. It's okay. All right. Appreciate you. I appreciate you, Han. Appreciate you, man. Okay. So thanks. Candle Mafia. Thank you, man. I appreciate you coming. And, thank you for coming and being there. I've seen you in Frankie Candle's live streams. I don't get to catch his live streams all the time because at the time they're in there, but I do think he's a great trader, and I do think that's a great community. So I appreciate you joining. Thanks for the through review, brother. Thank you, Hugo. I appreciate it. Okay, it's your first stream. Don't beat yourself up. Yeah, okay, thanks, Jaffiel. I'm trying, man. Okay, oopsimi poozy. I'm sorry if I screwed that up, but I'm glad you're loving the stream. Thank you. Appreciate it. Okay, Darcy, I'm happy you love the TA. Excellent stream. Thank you, guys. I appreciate all of you guys. I really do. And DJ is always so nice to me. I mean, DJ, I love it. Just takes time to get your flow. You're right. It does take time. And I notice, well, first of all, I know that I talk as fast as like a speeding rabbit, but also I do stumble a little bit on my words. Like I'll say, okay, we're going along here, and I meant short, or I'll say, okay, so I watch my videos back. Sometimes I'm like, no, that's not what I meant to say. Or I'll say, look we short squeezed up here, and it was, we had a long squeeze up, and it's like, no, that's a short squeeze. Why did you say long squeeze? People are going to think you suck, So I'm just getting better on, having what's in my brain come out of my mouth. But yes, okay, guys. So thank you all for joining tonight. Darcy, 69K is a big possibility to get hit. It will take some time. It's going to take some time, but overall we are in a downtrend, and we did see the higher time frame warning signals of this happening. So I would just say we take it as traders level to level, right? We don't care if the price, well, obviously we all care if the price is going down because we have spot bags, but as traders, we mark out our levels both bullishly and bearishly, and we trade whatever comes, right? That way you're always winning, and you always want to be hedging against yourself too. So if you're long from the lows, you're going to want to be looking for a short from the highs. Hedge against yourself, so no matter what, you're always in a winning trade. This is what the rich do with options trading. They're always hedging their bets. They have a big bag of Tesla that they have spot. Well, they have put options against those spot positions. So it's just about learning how to manage that and looking level to level. If we don't get our confirmations to enter level, you don't enter the level. If you miss the trade, you don't FOMO into the trade afterwards, which I also am still not perfect at. I do it because I do get FOMO, and I do break my own rules sometimes. And usually when I do, I kick myself for it afterwards saying, why the hell did I do that? I know better. but that's the psychology of trading. Psychology is such an important part. So I would say just work on it. You know, it is a process, and nothing beats experience in the market. Like, you know, I learned some pretty good technical analysis really early. I had some good teachers like Bitcoin Hyper, Jason, you know, some other guys like this. And I learned how to do the levels properly and find certain things. But my psychology was not right, and also my risk management was not quite right. And so I had to really learn the hard way with some of that stuff. And then also just, you know, FOMO is a real thing, you know, so you gotta work against that, fight against that. But overall, as long as you keep going with it and trying to get better and better, like I have some interesting stuff coming up. I might be partnering with a channel. I don't want to talk about it too much yet, but like trading journal type of stuff, you know, because I do think journaling is very helpful. But okay, guys, I'm out of here for real this time. Thank you so much for joining. I am going to try to do more streams. I don't know when though. So this was a test and I think it went pretty well. I also want to do a couple of things. You know, I didn't even get to do my cool little, like, I made like these really cool things like this, like, you know, I was going to kind of do this sometimes, but we didn't get to do that much. So, all right. See you guys later. Have a good one.